I know a lot of you noticed this letter from Rick. He sent it to me last night. We were chatting back and forth about a chart, and I was just blown away. I'm so proud of you, Rick. I don't know if it was okay to put this up or not. I didn't put your account number or anything. But don't bother Rick. Don't start trying to seek him out. Don't stalk him. He has the same information everyone has. He just did the homework and listened to what I had to say and took it to a whole nother level. I'm so proud of him. All I could say is bless you, Rick. I don't even know what to say, to be honest with you. It's just amazing, amazing, amazing. And congratulations. Okay. Someone wrote me some questions. I'm not trying to call anybody out here, so let me get rid of this. I don't even know if we can read that. Okay, this is some questions about the levels. I got a lot of these. He's not the only guy that wrote this, so I'm not picking on you, my friend. I took your name out of there so nobody would bother you or say anything to you, all right? I know everyone trades different, but my first question is, do you confirm a level, not intraday pushes, after it has touched the watermark? Heard this from Granny. Yes, that is one way to confirm a level, but the best way is to get a break above or below the next consolidation zone after day one. Understand that the levels, you can have an erratic run in day one, and then it comes back into consolidation. On the daily count, that whole thing could be one or two levels, but day one, level one. Day 2, level 2, day 3, level 3. That's the typical layout of the market maker structure. Now I'm going to show you one tonight that is a 2.5-day structure, not the typical 3 days. But I want you to understand that someone mentioned again also that I seem to mark the levels a little different than Carr. It's kind of crazy because it's an art form. And everyone sees it a little different. That's okay. There is a nuance to it. I don't know how to put my finger on it. It's not an exact science, unfortunately. That's what makes the business difficult. The market makers don't follow the rules. They make them. So you have to understand that. Okay? And understanding that if you get 2 to 3 days of rise, they're starting to run out of money. So you can look for the retracement or the reset against the retail trader trend to trap those guys. That's what's going on. Understanding that concept will help you understand the retracement. You have a 400 pip move in GBP-CHF. Well, that's the move that usually takes 2 to 3 days to do. The reversal is imminent. You start thinking of the opposite signals of the rest of the retail world. Don't go, oh, the technicals are down, the pair's down. You start thinking, man, that thing blew out the ADR threefold. They're going to have to retrace. Those guys are probably jacked up running out of short money. Understand? That's the concept. Now, the concept, once you understand it, you need to apply it to the chart in real trading. That's the hard part. That's where everybody falters, right? It's easy to say they give out their money, they get it back. And I've taken some screenshots of what I expect you to see. USD CHF was absolutely beautiful last night. They came back for the third pass. You knew the correction was huge. And I'm going to cover that chart for you guys. Okay, let's see if I got this, blah, blah, blah. If so, how many pips under or over? Okay, I can tell you right now, whoever wrote this is an engineer or some type of technician type person, a pilot perhaps. I went through this with Zaim for months. We went back and forth. Here's the thing. Like I said a few minutes ago, market makers don't follow the rules, they make the rules. They do what they want in relation to price. They move where they need to move to take the money away from the retail traders. That's the business. So there is no specific set, oh, it's going to be 2.7 pips below the break that's going to give you the start of the next level. It doesn't work like that. You have to step back and see. Price rises, goes into consolidation. All right, I see the consolidation. I'm looking for the break to start the next level after the stop hunt. That's how you have to understand. And if it's the second day of the cycle, that helps confirm it. I'm going to show you some illustrations of what I'm talking about. All right, the last question. Can there be a whole week of consolidation period as it looks this happen in GBP-CHF? Absolutely. Think about what they did. A chop or a sideways market is level 3 behavior. Level 3 behaviors are an extended collection period for the market makers. So what's going on in reality is they're holding the level and many things are happening. It's a big dance. It's not one thing. When they hold the level and across, they're moving the majors. If GBP CHF stays in a tight range, market makers are working GBP, USD, and USD CHF separately to handle the cross. When those two, when one rises and one falls, that's the proper movement for them. That creates a stalemate in the GBP/CHF pair. So that pair will have to chop sideways. Absent of market maker intervention and the retail traders swing it back and forth. If it gets out of whack, they will intervene and keep it where they need it to be kept. That's their job. But an extended sideways consolidation, it winds up like a spring. It's tighter, tighter, tighter. It's going to break, and it's going to break big. And that's exactly what happened. But before they broke it, they gave our group of traders the proper signals to take it. 3 hits to the top. The bottom fell out. It was a monster move. After a monster move, you got to stop thinking like a trend continuation retail trader and start looking for the signals to take it the other way against the retail world. Okay, that's what I'm advocating. Stop thinking like a retailer and start thinking like a market maker. Pretend it's your money on the other side of the screen. How would you handle it? You got to say to yourself, well, crap, I just let 800 pips slip through my fingers. I got to get some of that back. Let me buy heavy at level 3 and reverse the market so I can book a profit. That's what I want you to start thinking about when you're staring at the screen. Is open your mind to the concepts that these guys have to make money. Okay? All right, let's get to some other stuff. All right, this is how USD CHF presented last night. All right, did everybody see this? Let me blow this up. Actually, I like to make it so it takes up the full screen. Let's see. All right, that should be way better. All right, I'm waiting for it to pop on the screen there. All right, you guys can see that okay, right? Okay, here we go. Reconsolidate. Remember, last 1/3 to 1/4 of the box. The box is blown out, right? This is a perfect example. Box is blown out. Now, let me think for a minute. The box is already 100 plus pips, 97 plus the stop hunt spike to the top, right? Okay, now just glancing over here to the left. Price has come off of the bottom and risen. If it has risen 97 or 100 plus pips in the Asian session, and looking to the left, it's already been coming up for the last day or so, they got to get their money back. They got to get some money back. So what do we expect? We expect the second hit. Now, do you see the light blue tracer in the picture right here? Yesterday's high. By spiking yesterday's high, they got all the guys that trade the Joe Ross breakout method. They picked up those orders and snagged them back below, right? These guys were so selfish today that they made a third pass. Our entry is here on the second pass. That's okay. You don't know if they're going to give you a third pass. It doesn't always happen. If you took this trade and it went down to the watermark and didn't book a profit, you should have scratched out at break even. I'll talk about stop losses in a minute. This trade went like plus 35 or 37, and you should have scratched out at a break even on the third pass. That's okay. But the third pass should have validated that you are correct today, and you should, in fact, stay with this trade because it paid out nicely. Okay, let's look at the chart of how this thing played out. Let me blow it up for you guys. I got to get rid of the pen, sorry. All right, everyone can hear me okay, right? It's awful quiet in here. Okay, cool. All right, blow it back up. Let me enlarge it for you. Bigger. Try 200%. 200% is too big. Let's go 150. All right, everyone should be able to see that. Yep. Okay. All right, grab the pen back. All right, here's what you're looking at. This is the snapshot I showed you. This was the projection. It spiked down, just tapped the mayonnaise, and came back. Okay? Here's what happened. They realized there was more money sitting there, and the stops had to be worked of the people that caught this move correctly. Right? People that chase this. Stop loss levels are in here. We know that. They took the trade. Amateur traders put the stop above the entry candle, Right? Maybe they're a little smarter than the rest and they go a little higher. But they don't understand the stop loss goes outside the range. Remember, don't lose too much when you make a mistake. So here's what happened. If you notice, this spike is higher than the previous two or subsequent spikes right there. See it? It's higher. At first glance, if you're in that trade, you would get scared. Because the candle was solid green to the very top of that wick at one point in time. But remember, I told you it's about how they close and handle the high and low that gives you the clue to understanding the business properly. When he spikes that high on a full green candle, you don't panic and take yourself out. It's how he closes and handles the next bar that helps you make your decision. Market maker extended the high with a mild hit, 2 to 5 pips, opened the spread at the top of the bracket and absorbed the orders. Within the 15-minute period, he pulled it back down and closed, albeit up, but below the previous 2 pins to the top. Totally different story now. For our purposes and our technicals, the high is still held. He grabbed an extra few amount of contracts and hit a few stops before he goes on his merry way. The third swipe at the top, not to be confused with 3 swipes to the high, the third pin to the top confirms that he's going to correct big into the range. Why? He didn't go up there for a third time because he was bored twiddling his thumbs at the office. He went up there because there was a ton of cash up there, and he was inducing traders to continue the trend long. He validated the buy the dips in an uptrend. Right? He validated the buy the dips in the uptrend, and he validated the traders that take the trade above the high. Understand that if he comes back a third time, you will book a profit. Period. I know it's bold, but that's the business. Okay, so everyone, if you got scratched out, your entry is here. This clue right here, this is the clue right here, that the trade is still valid. Market maker spiked the high, took the high off the board by 2 to 5 pips, opened the spread, pulls back, closes well below the previous 2 highs. The next candle, he spikes down and closes below all 3 highs. Now, you're waiting for him to shift the zone. Don't wait too long because he's gone. And your stop loss is going to be too deep. When that candle closes, you take the trade. Your stop loss is right here. It's reasonable. It's a reasonable risk to reward on this trade, I promise. First target, mayonnaise. Okay? First target is mayonnaise in this example. Why? Because he already broke the water and went to the mayonnaise. Now he's got to come back and fake these guys out again. Then look what happens. Stop hunt high, U.S. session beginning, false move session ending, stop hunt high, session beginning, pins to the top side in line with my triple top peak, another entry point. Perhaps a scale in, railroad tracks high. Okay? Listen, it's been 3 days together. Don't ask me what time frame this is. How many times do I got to say it? 15 minutes unless otherwise specified. That's our trading window. You guys should know this stuff now. I like you. I'm not ripping on you. Don't ask me the time frame. It's 15 minutes for the rest of your natural life that you're alive unless you're checking levels. 15 minutes. One more time. Every chart that I show you is 15 minutes. I read the averages on the 15. I know the cycle of every chart. I will teach you that in a few minutes. Okay? Really? Maria, come on. You know this. Water, 50 EMA. I went over it yesterday. All right? I went over the slides. I wrote down. I drew, remember? Ketchup, mustard, water, mayonnaise, blue. Hey, Ron, how you doing? All right, guys, come on. Every chart I show you, 15 minutes, unless otherwise specified. Is 10 minutes okay, David? Why would you trade a 10-minute chart? I just gave you the keys to the city. Didn't you read Rick's email? Don't try to change this. You're going to destroy yourself. Don't change the chart, all right? Jose, you're afraid because you don't understand the structure. All right. Love you guys. Come on, man. We've been together too many days now. It's just, today's the day things start to click. If they don't, I'm failing you as a teacher. All right, we'll talk about this stuff. Okay, here's the deal. Let me clean the slide, man. I think it's harder on this screen, but let me do it for you anyway. Let me start back over. All right, here we go. I'm a little jacked up. Erase all drawings. All right, get the pen back. Okay, look. This is a work of art to me, man. I'm telling you, this is a beautiful trade. Box is blown out. The range is 97 pips. A quick glance to the downside of the chart illustrates that market makers have been rising. They came off the bottom. Price is going up. They blew 100 pips in the Asian session. David, you're not going to get the jump by using a faster chart. You're not going to get in sooner. The chart is the chart. You're looking for the signals. When you're successful trading the 15-minute chart, you can do any chart you want. But right now, to learn, let's all stick to the same charts. You think that I haven't tried this stuff in different time frames and different periods? This is the best chart. How you doing, Bowser? Nice to see you, buddy. Okay. Look. Pin to the top. Remember this. The first move that they make out of the box is usually the false move. Remember? False move session beginning, false move session ending, or trap move. Either way. Trap move session beginning, trap move session ending. They end the Asian session with what? A false move to the high. They come back London and they false move up. They come back mid-session for a third pass. The third pass, remember the pins flip to the side they're working. When the pins flip to the side they're working, game over. That's your clue. How do I know that which one's the best? Right? I know some of you thought this railroad track was the reversal. That's okay. But when they issue the pin in here, you should have got out of your long. That's the second pin to the top side. Scratch yourself out. You know now. The third pass guarantees the correction is imminent. When they spike the high and close back below, they tap the high and close back below, and then the next candle issues down, lights out. You own it. First target, remember, hit the stops, drop. See all this mess in here? This mess is to keep everybody off guard. That's by design. That's on purpose. And it works on some of you still. What I want you to understand is that the trap moves are made end of session, beginning of session. That's your clue. End of the session, he breaks high, ends on a pin. Beginning of the next session, breaks high, ends on a pin. Man, if that ain't a setup, I don't know what is. He then comes back for you because he felt bad and he wanted to give you one more chance to get in. He didn't really feel bad for you. There was too much money up there and wanted you to get in there. Okay? That is a lights out trade. All right, everybody good? Hey, Gary, how you doing? All right. You're going to see this stuff a couple of times during the week in every pair perfect. If I'm not mistaken, I think Monday we had 3 hits to the high in the GBP, CHF, GBP, USD, Euro Cross. Then the next night we had railroad tracks extended W to the bottom side, easy. And then last night CHF presented 3 pins to the top. Craig, I'm going to talk about that, but I have a matrix of about 9 pairs, and I'll show you that. I have all the crosses matched up to understand which one's moving and not and holding the levels. I will cover that. Hopefully tonight. If not, definitely tomorrow. Okay? Don't you see? That's a work of art, man. You could identify the high within a few pips. Okay, Dale, good. All right. Let me get on to the next chart. Okay, this is the chart me and Rick were talking about. Can everyone see this chart okay? It hasn't blown up on my view yet. You guys should have it in a second. All right, beautiful. Thank you. All right. Here we go. Week beginning, consolidation. Right? Vector 3, 1, 2, 3. This is like I drew a sketch of this, man. It's absolutely a work of art. Stop, hunt low, shadow box, pull back, hit it again. There's your W formation. There's your anchor point, W. Okay, now what do we expect? V, V, M. Right? That's the projection. Nelson, I know, but this happens every week. Nelson made the comment that they really helped us out in the class here by offering good setups. Once you see this shit, it's in there every day, every week. It's crazy. All right, look, so now we have our anchor point. We know the setup. Right? Okay, so we got first day W. They come back. End the day in consolidation. Anybody trading breakouts? We got it for you. We got something for you. There you go. Stop, hunt down, V formation, rise. By the way, level 1, day 1. Level 2, day 2. They also went level 3. 2.5 day cycle. Okay, actually, no. It's level 2, day 2. Level 3 is in here. Hold on. I'll get to it. I'm confusing myself. All right. Everybody good? 1, 2, 3 to the low, vector right out of the box. Pick up the breakouts here and here. Mess with them a little bit. Spike the low. There's the W. There's your anchor. We expect V, V, and M. Okay, now, back into consolidation. Hold the level. Pick up the breakouts. Spike the low. We expect the V bottom, and that's exactly what he offers us. Okay, he does it again in the U.S. session. Now, we've hit the top. We expect day 3, rise and reverse. I'm trying to get the thing to work. All right, we expect right in here, rise and reverse. Now, here's what happens. If you took this first M, that's okay. If you took this as a down move. This trade hit the water for about 45 pips and scratched out. If you didn't take. If you were going for 50, if you're going for the full run. This was a scratch. The next move, as anticipated, here's how it ended up. Okay, I'm waiting for it to catch up so you can see it. All right, look. Here's how it ended up. Hammer in the shadow box, looks good. The trade only offered up about 40 pips or so. Your stop should be a break even. You should scratch out of that. That's okay. Market makers come back. You're +0 or +1 here. That's okay. You take it. If he comes back and hits it again, he cuts the high in vector. Again, he cuts the high. In 3 swipes. He comes back to the high and cuts it in 3 swipes. Now, you got something. He pulls right back below the high. There's your entry. 2 pins to the top, railroad tracks, vector, 25 to 50 pips above the box. There's your second opportunity to book. Nice to see you, Marty. What about the W after the scratch trade? What's the bias? You could take that too. That's for a little more advanced, to trade level 3 both ways. What's the bias? WVVM. You're looking for shorts now. Why? Market makers lent out his money, lent out his money, lent out his money. He needs some back. The correction is imminent. The correction is imminent. How else do I know? Hop over and take a look at Canadian. How did the cross handle? Those are things you're going to have to put together over time. It takes time. I'm trying to get you on the right path right now. We'll spend time. We'll have more sessions with the disparity and stuff. Just understand. Dave, come on, man. You got to be kidding me. All right, listen. If the market maker breaks high, you sell. If you scratch out, don't go on vacation. Understand he's going to hit it again. He's going to give you vector. He's going to give you some reason to take it again. When he extends the stop hunt higher, it's because there was more contracts there. He couldn't help himself. But he does exactly what he was supposed to do and corrects back to the mayonnaise. He ends the day in the pattern, reversal, U.S. session, right back into consolidation, and he's heading down probably again. I know the spike doesn't look like an M. It's a V-top. There's anomalies in that. You have to understand. It's not going to be, he's not going to go like this for you every single time. He's not going to do that. That comes from screen time and experience and knowing what he's going to do. Thanks, Zen, for putting that up for David. David, I didn't know if it was your first day or what, but I've covered this. All right, understand. W, let's go back a chart. W is the anchor point. Now here's what I want for you to happen for you. I want you to get yourself in a position financially that you only take. I'm trying to find my pen. All right, here we go. That you only take this trade. These two trades. Why? First of all, when the second leg comes in, it's very, very distinguishable and easy to identify. And because it's the trend reversal or the second pass, you know they got to get the hell out of there, right? I've been telling you, look what happened here. They crossed the 4 hour. They're below the 200, right? 200 EMA. The 4 hour, 50. I'm going to cover this. The 50 watermark. You know that they got everybody faked out thinking down. All the retail traders are thinking down. So what do? Buy the rallies, sell the rallies in a downtrend, right? Anticipating this. That's what they're expecting. When this presents, this trade goes right into profit and never looks back. You got your 50 easy. Both targets were acquired on that. Why? Because the second leg or the third pass at the level guarantees the market maker has to get the hell out of the zone to snag all the traders, hit their stops, get you to lift your stop, get you in margin trouble. Remember the screen, day one? Margin screen. Who's in margin trouble? Man, I got $500 million in open float right on the edge. They're trying to buy this short. They're trying to get out. They're stuck from previous time. They're right on the fence. If I rise price 80 pips, I'll call all those traders out and I own them. I'll own their account. What do you think they're going to do? They're going to do it. So that's why second leg trades take off. It's the second pass to validate the pattern short. Pick up the orders of the traders that are trading the technicals in the book. They reverse out of there hard as heck. Straight green rise for hours, right up. What happens when that happens to you? You lift your stop, kick your dog, get upset, turn on the TV, try to figure out what the hell's going on. Don't understand why it's rising. Those are all the things that retail traders do. Yes, beat the wife, kick the dog. I forgot about that. When that happens, market makers continue to rise and create panic in the marketplace. The panic, because you lift your stop and do stupid things, gets you in trouble, and that's how they own your account. So second leg of W should be traded with 50 standards or 100 standards. Not tomorrow, when you get there. But these trades can be taken with the highest level of confidence, because they are a market maker trick to finish the traders and get their account. Okay? That's why they happen. So what's the difference if you take 10 trades all week with one standard, or you sit patiently, lie in wait for the market maker to present you a W or a triple top high, triple top low after the consolidation stop hunt comes to rest, and you pounce on that guy with 10, 20, 30 standards. When he does that and offers you that trade, you could be done for the week in about 45 minutes with no drawdown, no stress, and no aggravation. That's what I want for all of you. Okay? That's what I want you to understand. Activity does not breed success. Taking the proper trades on the second leg of W or M formation breeds success and nothing else. Why? Because those trades are certain to pay out. Taking something every single night is not the answer to the business. You're exposing yourself to risk. Lying in wait for the dealer to show you something, his actions warrant your reactions, is the right way to handle the business. I understand that you've never had the confidence to trade multiple lots before because you never could understand the structure of the market. I am handing you the key to the city, or the key to the safe that holds the instructions of the market structure. These guys have to behave like this because all the other traders are behaving the opposite way. You know what they're doing now. Now you can see, man, that's a perfect W. I'm going to take 10 standards on that, go for 50 pips. That's $5,000. I'm good. I'll wait for the next one. If it takes a week, takes 7 days, takes 8 days, 10 days, it doesn't matter, because I have enough money to last me till the next time it sets up. Do you think Rick is chasing crap after the day he just had? Most people don't make that working in a year, especially in this economy. If it took 3 more months for Rick to get another $100,000 day, he's doing pretty good. There's no hurry to force it. My goal and my desire for everyone in here is to get to that level. I don't know what your bills are, what you want to do, but you need to bring it up slow. And when you get using proper money management and picking the M's and W's without fail at the right times of the day, vector. By the way, I didn't mention first leg came in on the shadow box on the W on this trade. When the second leg comes in and they don't take out the low, it's game over. Okay, that's what I want for you. You can stack on the lots. If your desire is to trade 5 standards, 2 standards, that's okay. These trades, dare I say it, are 90+% accurate. I said it in one of my slides. I can't say that publicly because I'll be committed to the loony bin. There'll be guys over here with a straitjacket trying to wrap me up in a few minutes. This kind of stuff is unprecedented and unheard of in the business, except on the market maker side of the platform. If you can master this, you own these guys because you will become one of them. You trade like them and think like them, you are one. Okay? I'm a little excited if you haven't noticed. I love this business. It's fantastic. Okay, let's get to the slides. If you want to look at this chart, this is EuroCAD over the last 3 days. It's almost like if there was a textbook, I would put this in it. It's so perfect. Thank you, Gloria. All right, let me ditch the pen, get the slides going. All right, I think this is where we left off. We talked about the stop hunts if they get you. Wait for the next level rise, right? We covered this, yeah. Wait for the next level rise, about 2 hours. Come back around 90 minutes, see where they're at, see what they're issuing. Thank you, guys. I appreciate the nice comments. Yes, I was going to ask all of you too. At the end of this class, I want you to send me an email with your signature trade. When I go over all the trades, I want you to find one trade that's going to be your bread and butter go-to trade. Could be a W formation, London Open on the mayonnaise, pins to the mayo, that was Lauren's. I don't know if I think that's what Bowser's doing. There's a couple of different people that have said, this is my trade, I'm going for this. Multi-session M's, W's. I want you to practice, see what works, see what doesn't work, see what fits your personality. Okay? Jose, the market's too big, don't worry. Okay, here we go. All right, the trap candle patterns. Carr mentioned yesterday that he had a chart full of the patterns, the trap patterns. And I'm going to illustrate those for you now. Take notes, take pictures, whatever. Just don't put it on the internet, please. Thanks, Nick. All right, there's a trade we call half a Batman. All right, half a Batman is just an outside bar to the high or low, inverted half a Batman. And to me, it kind of looked like half a Batman's head rolling over. I don't know. Some of you guys don't know what that is. It's in reruns on Nick at Night or something. Whenever I think of that trade, I think, all right, I'm losing it. Look, here's what happened. Market maker came in. Let me take the Batman off of there. Hold on. That's an inverted Batman. Look, market maker came out of the consolidation. Price was coming up. He spiked the high of the day. He then used this as an outside structure, right? Outside bar to the high. He stayed within the range, not allowing anybody in here to see a profit that he picked up the longs on. Your job is to take entry somewhere in here. There's a little subtle clue in there that lets you know that this is the point in time. See if anybody sees it. Anybody? Throw it up there. Come on, start challenging your mind. What's the clue that that's going to work? Yeah, blue tracer, baby. Why? Remember the breakout traders above yesterday's high and low. When he spikes that high and pulls back, the way that a breakout system is traded is a break plus a close above the price point, right? Notice something really cool right here. A break plus a close. They enter on the next candle. These candles don't go above the close. Isn't that kind of cool? Ah, another clue. He opens the spread. He brings the one green candle right up there. The rest of the candles close below where the breakout traders took their trade. And because of the spread, they do not get a profit on their trade on that second green candle right here. They do not see a profit right here. The spread is the market maker's tool. All right, let's think about his arsenal for a minute. Monster equity pools, but we know it's not unlimited. Restrictions by the World Bank, IMF. He cannot just destroy the world because he's, rub his chin and go, ha, ha, ha. He can't do it. He's limited to ADR, weekly and daily. He could hit the stops up or down and change the direction of the trend and catch you off guard. That's all he's got. If you know this, you can anticipate what he's going to do. If you can anticipate what he's going to do, you can beat him. Okay? So back to the structure. The closes are low. So what's going to happen is TDI or RSI or whatever you're using will take an average of the closing points and start to fade. Okay? He spiked past the previous day's high. He stays above the high to keep people thinking it's a continuation. Sorry about that. They're thinking this, right? That's what they're thinking because he's above here. He's above yesterday's high of the day. Trading above yesterday's high warrants the continuation from technical side of the business. But the fact that he holds the closes below the breakout entry keeps you knowing you're on the right side of this. This is a very important piece of the puzzle. The blue tracer is. He goes up here, opens the spread, picks up whatever orders are necessary. Close below, close below, close below. RSI averages the closes down. MACD would average the closes down. Or TDI, rather. I'm sorry. I'm talking about MACD. All right. I got McDonald's or something on my brain. Okay. Understand? And then look what happens. You need to be in here. Why? How long is this structure supposed to last? 30 to 90 minutes. When the high is set here, 1, 2, 3, 4, 5. If you can't make up your mind in an hour and 15, trading a 15-minute chart, not a 10-minute, you got an hour and 15 minutes to decide. You don't have to hurry up. If I told you the run is 6 to 8 hours overnight, what's your hurry? If I told you that he's going to work the high 30 to 90 minutes, what's your hurry? If he issues railroad tracks and shifts the zone on you, you missed it. Don't chase it. Don't drive yourself insane chasing these guys. That's what they want. That's amateur stuff. You guys are beyond amateur level now. If he doesn't issue you half a Batman or stay in the range, or if you decide, hey, Steve, I'm only taking M formation, second leg, and he doesn't issue you the second leg, you missed the trade today. Who cares? I showed you all week the setups. They're in there. Go back. You've been doing the homework. They're in there. Carr sent me years of charts, hundreds of them. I had to buy a new hard drive because of him. But they're all in there. That's what I want you to understand. That if you miss something today, you don't have to have the mentality like, oh my God, now I got to wait for a new setup. It comes back all the time. Okay? Why? Because human nature and human behavior, fear and greed, the things that actually drive the market and money, haven't changed. Okay? That's what I'm talking about. The behaviors that people do haven't changed, so market makers' actions to those behaviors have not changed. That's what I want you to understand. You should have a calmness come over you now when you're trading. You don't have to panic. You don't have to freak out. If you miss the high of the day, guess what? There's going to be a low of the day. And he's going to offer the reversal in the right part of the cycle. And you can take the W back into the range. Okay? That's the kind of stuff I want you to understand. This stuff has been there as long as I can remember. And when I did my homework, it really is. Go back as far back as your platform will let you. It's in there. You're going to be like, wow. Thank you, Asubio. Asubio said great truth. By the way, a lot of you don't know, Asubio, I don't know, he's going to get mad at me. He's booked 1 million pips. Sorry, buddy. I had to say it. I said it. He booked 1 million pips. Doesn't matter if it was micros, mini, standards. It doesn't matter. He lives offshore. He can scale in. He understands the method like no one. Well, except Rick. I got some good students, man. I don't want to say that about anybody. He's a master. Don't be bothering him now and PMing him and trying to go to his house and stuff. That's what everybody does. He has the same knowledge you have. He's just done the work that it takes to get to where it takes. He's rolled up his sleeves and done what it takes. Okay? And he's still here to try to improve his skills. That amazes me. He's a student of the game the right way. Not when you're losing and going to every college and go, oh, I became a student of the game. He's a student of the right knowledge. He's a fantastic guy, too. Subio, I hope I didn't create a barrage of emails for you. I'm sorry, man. Okay. There is magic in the homework, Tommy. Listen, the process to learn this is the process. I didn't make it up. It's the way I was taught. And listen, when I said, hey, do some homework, I did the same shit you guys did. I'm like, I didn't pay this guy homework? You got to be kidding me. That's exactly what I said. Told my wife, homework? This guy wants me to do homework? What am I, a kindergartner? Am I in grade school? I was pissed, just like you guys are. But what happens is it creates the transformation. It builds the confidence in the setups because, man, when it starts painting, when you start really observing the highs and lows and how they handle it and the setups, you'll see a spike to the high and you go, man, that 3-bar structure to the high with the pullback half of Batman, I saw that 25 times in the last batch of homework I did. And every single time it paid out. It takes away the fear and instills the confidence to pull the trigger with multiple contracts and know that it's a very high probability payout. Okay? I learned by a market maker. Some people ask who taught me. He passed. Okay. All right, here we go. Same type of deal, right? This is your 3 vector. Here's your consolidation. These are the trap moves by the market maker. I want you to understand. Stop thinking like a retail trader. This is exactly the structure I drew for you on the little sketch yesterday. Remember 61, 80, 84? Remember that? This is the same structure. Look. He cuts the low in an aggressive move to get things rolling. 10 to 15 pips. Let's just say this is a 50 pip run. Let's go. He cuts the stops in 25 pips, triggers them. He hits it again, maybe 20 pips. Now you're at 45. His goal is to do a 50 pip stop hunt. He taps it again 5 to 7 more and then snatches it away and goes into consolidation. Understand? That's the structure, right? And it's no different if it was a 25. Let me here. It's no different if it was a 25 pip stop hunt. Okay, look. 1, 2, 3 to the low. The first hit, 10 to 15 pips. Let's call it 15. The next hit, maybe 8 or 10. Let's say 8 because that puts us just under 25. And then he'll tap it again, 2 to 5 pips. The tap picks up the orders down here because when he goes down there to tap it, he also has the spread to pick up. So if he taps 2 to 5 and the spread is 5, that's a 7 to 10 tap. If the spread is 3 and he goes 5, that's an 8 pip tap. He opens the spread. The spread gives him the edge. Remember? The spread's one of his tools, his weapons against us. Okay, understand. It's the same structure. This is what I want you to realize. This whole thing right here is an outside bar, right? The 2 bars together. Because if this was a 30-minute chart, this would be one big bar. 15 and 15. So you can count these 2 pieces together as one outside structure to the low. Forms the LOD. And then market maker trades off the LOD to make traders warrant a continuation. Ben, Zen will cover how to. We'll do this. Zen, add this to the list on for Sunday night. How do you see the spread? He'll show you how to put the bid and ask on the chart and show you how to use the little blue side window in MT4, okay? We'll add that as part of the teaching for Sunday's breakout session. Any technical issues that you're having now, hold them for Sunday. That's why we have the breakout session. We're going to clean up all the technical stuff. Platform issues, time mapping, indicators, okay? That's what we're going to do. I think that's a good way to go about it. All right. Let me get through these patterns. Okay, same type of thing, man. He just ends on a spike to the low. Okay, you can argue you're 1, 2, 3 in here. Depending on how this candle pulsates and how big it is, it could be 2 and 3 within the same candle and close back up here. This becomes your LOD, your low of the day, right? Then he works the range above the LOD inside of here, not allowing anyone to see a profit that's stuck short. That's the business. He may or may not give you the second leg. This would be a V bottom. If he gives you the second leg, it's easier to see. If he does not, understand. The structure must last 30 to 90 minutes. Okay? 30 to 90 minutes. Why? We have to consider the railroad track where he gets in there and gets out. So that's why we have to say 30 to 90. But a good setup takes about 90 minutes to present. That's plenty of time to make up your mind to enter the trades. Okay? Variations on the theme. We got 3 pins to the top side. They did this last night in CHF, right? This is exactly, and look what's in there. Exactly, right? Look at that. See? Once you start realizing it's the same thing over and over. It's the same thing. What has he got? 3 pins to the top, slightly above yesterday's high, and come back below. He did that yesterday. 3 pins to the top in CHF. Right? He just spread it out a little more in CHF to confuse you. But this is their work. This is where he makes his money. He's making his money, right? Then for anybody that was long, that had their stops aggregated in here, he comes back and gets those too. This is the M formation here. Your entry is on the hammer close. 3rd pin closes in a hammer. Don't even think about it. Grab. Because then you know what's coming next. He shifts the zone away from the higher level long holders. Right? The shift candle or shift bar is coming. Don't chase it. When it shifts and you're not in, you missed. Your job is to deal 10 to 15 pips off of the high of the day. Add the spread and the stop. You're going to have around 30 pip stop at maximum. When you become very proficient, Carl and Kim are going to talk about their stops and some of their trades tonight. I brought them in. It's going to be fantastic at the very end tonight. They're going to talk to you about how tight their stops are. I won't even say the number. It's sickening. It's not sickening. It's a work of art, actually. But if you've been using 40, 50 pip stops, when you hear this tonight, you're going to be like, damn, I've been wasting too much money on my stop outs. Okay? That's coming later. All right, I realize it's 7. I got to pee. I'm sorry. Let's take a 7-minute break, and we'll keep going, all right? So we were talking about it, right? We were talking about this same exact slide right here. This is exactly what they did in CHF. They just spread it out. But this is your clue right here, the way they handled the high from yesterday. This was yesterday's high of the day. They come right to it, spike it, hammer closes below, spike it again, hit the stops of the people that went long, that fell for the break. They do this right here. They catch all the stops that are aggregated in here with that move. They come back, trap again, and then they shift the zone down. There's the shift bar. It's over. You should be in here, game over. Okay? If you got in here, that's okay too. Either one. The third hit is the absolute confirmation. When that third bar goes up there, stays below the previous high, right? Comes right to it. There's a couple pip distance in there, depending on the pair and the spread. They go right to it and sit on that number. It's actually fascinating to watch. It's kind of cool. Put the board up, the high-low board, and Zen's going to show you how to do that for the MT4 users that don't know how. It's a simple operation, but Zen, add that to the list. I'm giving you like a whole laundry list. Make sure you have your high-low board. And when they start working the high or low, you're going to see, like, just pick one pair. Say, all right, I'm going to watch Euro today. They'll come, they'll hit it. You'll see the number change rapidly on the board. Then it'll flash and sit there and pulsate. It won't move. They'll hit it again. It'll pulsate, change. They'll hit it again, and then it'll click red, green, yellow, and it won't move. The spread's opening up, and they're picking up the orders. But on the high-low board, it'll just flicker. And I know you've seen it flickering. You just didn't understand how to look at it. And I'm telling you now, it'll change colors. It won't move much at all. One side of the price will freeze. The other side will move. So the bid might hold, the ask will move, or the ask might hold, and the bid might move, depending on what side of the structure you're on. Up or down, right? They're opening the spread, picking up the orders, and holding it. Okay? When you identify this behavior, you know you're at the right segment of the market. So incorporate the high-low board into your learning process, whatever works for you. I know Scott T., I don't know if he's here tonight, but he went crazy with the high-low board and fractional disparity, and he describes it as a flurry of orders coming in. Numbers change faster. Yeah, that's a good way to describe it. It's like a flurry of orders coming through where the market maker's flashing the pair, so to speak, and it bounces around a lot. But I thought Scott was going to cut off his ear at one time and become like a Van Gogh. He went crazy and made a masterpiece of identifying the high and low. And I was worried for him. I was like buying him earmuffs and shit. I didn't want to make sure I had his ears covered at all times. Anyway, I'm kidding, man. Okay, here we go. Another variation on the theme of the trap move, okay? 3 to the low. Could be all in, it could be in 2 candles, right? It could be 1, 2 in here. I don't know because I didn't watch it. But when it pushes down, you'll see it in bursts. This could be 2 because it barely takes out the low. If the candle stays right here and doesn't take out the low, you need like a push, a sideways back, push it again, then push it again down to the third for the third swipe, and then they stay right there. When they open the candle, they might come down here and hang out for a few minutes. It just doesn't move. It's the weirdest thing. Then all of a sudden, they got the number they were seeking, and then just go bzzz, right to the top. I know it's pretty good sound effects, right? Yes, this could be half a Batman rise. Inverted half of Batman. Look, remember I talked about this. Evening star formation, right? Ends on a hammer. A perfect evening star has a little more tail on this side, but you know what's going on here. This is an extra 15 minutes to steal some money off the people. That's all that means. And the fact that it ends on a hammer makes it better. The entry's okay here, but man, when you get proficient, you'll be able to grab that. Okay? I hope you're marking these patterns down, marking the tape. This is the stuff you're going to see over and over and over again. Remember I told you the pins turn to the side they're working, right? Notice no pin. All of a sudden they start working it, you have pins. Pins or stems or wicks, whatever the hell you want to call them, they turn to the downside. That's the clue you're getting close to the low of the day or the high of the day. Okay? All right, this is beautiful. Look, when you see a big spike like that, especially if it's at the appropriate time, remember 3 to 4 a.m., 9 to 10 a.m. That's the reversal coming. They do that last vector candle to reach all the way down and to make everybody that thinks the trend continuation is down to fall for it by showing a false or perceived momentum in the marketplace, an acceleration bar, if you will. Man, that looks like it's really going down. I got to get on some of that euro. I can't believe I'm missing that move. Look at that. Euro's dropping like a rock. It's been dropping all night. This move comes in after a drop overnight between 9 and 10 in the morning, and then they pull right back above the level. There's your LOD. Market makers consolidate outside, right? This is a big outside structure. They consolidate within that range, not allowing anyone to see a profit. They can end the day on that structure. And if you fell for that, you're trapped. What happens? You pay swap rollover. Same exact opposite thing, right? A reach to the top, trap the traders, and stay off of the numbers. Stay away from it. They don't want to go back here because they got, at every price point, they got traders trapped. They picked up whatever they needed to pick up in here, came right back, and he pushed it down right away. This candle may or may not have stopped out the weak holders, but I guarantee when they started drifting away, they lifted their stops and did stupid things. Not understanding the structure of the market, all right? Again, look, at the open, London. Asia, start of the day rather, you rebracket this. Last 1/3 to 1/4 of the box. Right? This is exactly what I just showed you. The last trap. They make the move. You rebracket the last quarter of the box. There's your stop hunt high. There's your pins turned over just below the mayonnaise. This is a valid M formation drop. There's your shift the zone. There's your entry. Okay? Hope you guys are getting this stuff. Hope you're seeing it. Okay, when the box is blown out, this candle on the bottom makes the box look like this. All right, the box looks a little too big, Steve, blah, blah, blah. All right, so then you know better than a box. You're smarter than a little piece of blue paper or blue ribbon. You come in here and you rebracket the tight consolidation. You're looking for your vector to the high. 1, 2, 3, hits it. This one goes right up, remember, taps it, changes the high on the board by a pip or two, maybe not, comes all the way back down, ends on a hammer. This happens at 3:30, 3:45, lights out. You own it. Get in before they shift on you. There's your shift. That trade that puts all the regular retail traders in pain puts us in profit immediately. Notice something about this candle. This one candle takes back all the damage in here. Takes it all back and spikes down there. See it? That could be a 25 to 50 pip candle by itself. You'll be limit up in the next open. As soon as that candle opens, pushes down, you're limit up. You're out. TP's hit. Whatever you want to call it. That's the kind of stuff I'm talking about. You're going to be like, man, I made $5 grand in 30 minutes. Now what do I do with the rest of my day? Go hang out with your family, man. That's why you got in the trading business. Some of you guys are like addicted to the action, and that's a problem I can't help you with. That's a job for Norm. Norm's got to like get in your brain and plant some bugs in there to get you addicted to the action. Is not. There's a difference between being addicted to the action. Go to Vegas. If you live close to an Indian reservation, go to a casino. Don't throw your money away when you grab it in 2 to 3 bars and you're out and feel like, man, it was too easy. A couple of my students early on felt like it was too easy, and they went on this quest for other garbage, like adding rainbow stochastics and more stuff, because it was too easy to see. It was like, man, it can't be that easy. It really is that easy. Okay? It really is. When you become proficient at identifying these moves, you're going to be in and out 15, 20, 30, 45 minutes, man. Sometimes you get, like the other night, you get a 100 pip, 15-minute bar. And if you grab the entry, you're out in like half a bar. You're like, oh my God, 10 minutes. It's crazy. But that's how trading's meant to be. Not sit there and nurse it, drink Red Bull. Remember, kick the wife, beat the dog, all those, combination of the two. Mad because you can't figure it out. You're going to own this stuff now. All right, here, same thing, railroad tracks. This is what railroad tracks look like. They reach out right past the moving averages. They hit it, and they get out of there quickly. Like, get the hell out. The next bar, they get the hell out. Right? The 2 bars takes back an hour of work. That's what you have to see. When the bars shift the zone. Listen, I don't really kick my dog or my wife. Some people are commenting about that. It's a joke, man. It's just people get frustrated in the trading business, and I've seen people like, turn on the TV, put the news on, what the hell happened? That's what I'm referencing to. Then you sit there for 3 days, start stinking, don't take a shower, don't move from the computer, lift your stop, and you start praying to God that you can get out of the mess you created for yourself. Or you start going the wrong way, and you go, you know what, I'm going to start scaling in today. And you start scaling in the wrong way, trying to average out. Those are the mistakes that people make not understanding the structure. Okay? Enter market. Enter your trade at market. Okay? Good one, Leaf. All right, man. This is like this is my masterpiece, right? I have this framed in my hallway, has a little light on it. I had it redone in velvet. I think like you send in a picture and they send it back in canvas. It's on the way. I just ordered it, right? Look, this is exactly what I've been teaching you. Let's go over it. 53.2 pip range, not a big deal. It's a little higher than I like to see. Why do I like the blue box to be 50 pips or less? It sets the trading zone and makes the stop hunts easier to see. That's why. Can the box be 90 pips and still pick a good entry? Absolutely. But I want you to understand that if the box is blown out, it's your job to reanalyze and re-bracket the consolidation prior to the open. Okay, just like I've shown you. You redraw. Okay, this is one of those structures where they go 1, 2, 3 to the high, right? They cut the high in 3 swipes, but it takes longer than normal because they stall in there for a few minutes, waiting to see how the orders will play out. So they'll hit it, hang out 15 minutes. Hit it again, hang out 45 minutes. Hit it again. Wait 15 minutes, hit it again. Do y'all see that? Hit it, right? Extend this line here. They hit it, wait 15 to 30 minutes. Hit it again, wait 15 minutes. Then hit it again and pull back. That's your 3 to the high. When you start watching this stuff like Scott has done, you'll understand. They issue railroad tracks immediately, and then what do they got to do? They got the volume. They took like, let's see, cut the high, 1, 2, 3, 4, 5, 6. What's 6 times 15? Hour and a half, right? They took an hour and a half, 1.5 hours, an hour and a half to set up the structure. So now they got everybody thinking long. They crossed the 200, which is a marker for most traders to go long. Now they got, what do they got to do? Get the hell out of there quick. Bam! They take all that work back in one swipe. One candle shifts the zone and takes back an hour and a half of accumulating orders. So in 15 minutes, they destroyed everybody's hopes and philosophies that it was going to go long. It kind of sucks. That's when I talk about when you go to the bathroom or you go get a cup of coffee. You get excited and you think, man, 15 minutes. You come back and you think your trade's going to be up big, and instead the opposite has happened. That's what happens to people. Yes, some people say they see a minor 1, 2, 3 in here. Yes, how do you know? You measure the trading zone. 25 to 50 pips, depending on the pair. I'll give you the numbers tonight. 25 to 50 pips higher than. The zone is set, remember? 25 to 50 pips, especially when you're learning and can't recognize. 25 to 50 pips above the box, 25 to 50 pips below the box is the ideal trading zone. because that's where everybody puts their stops, and that's why they move that amount. Okay? Shift the zone, go into consolidation to hold the level. Again, hit the stops, drop. Hit the stops, drop. Pins turn to the downside. The W starts forming up. You're here. You know the LOD holds. You're a buyer against the retail trader's trend. First target, water. Second target, mayonnaise. Third target, your bedroom. You're done for today. Okay? That's your 3 targets. Make your money, go to bed. Okay, that's the setup. That's how it looks. That's what you're looking for. Take a picture of that and have it sent and make it a canvas in your house. All right, I'll put it up there clean so you don't have my stuff on there. That's the structure. Now, there's variations on the theme. Sometimes they'll come in and make the M perfect and the W on the other side, or they'll make the M on the top and the V bottom and reverse back in. Okay? But you're also looking for your 3 levels of drop. 1, level 2 is smaller, absent of market maker participation. Level 3, spikes to the low. 1 more swipe down to form out the second leg. Game over. Okay? That's the structure. Thank you, Bruno. It is unbelievable, but it's in there. This chart, by the way, is a year old maybe. And I joke around and say that I always grabbed it right there. I didn't. I grabbed it right here like everybody else. And I grabbed it right here on that green close. That's the entries. Okay? Let me clean it up so you can see. Hold on. I'll show you the entries. Okay, entry here. This is kind of late. Stop is too deep. I don't want you chasing it. I know it paid out, but you're not in the business of guessing if it's going to pay out. Okay? Entry is right here. Stop loss below. I'll talk about that in a few minutes. Stop loss up here. All right? Second leg comes in. It pins to the low, closes back on a green bar. You got it. Target 1, water. Target 2, mayo. Okay? Now, you just traded both sides of the range. Steve, I don't want to stay up all night and wait for it to make its ADR run. I want to trade in the middle. That's possible, and that will come to you in time. If you understand the structure that's going to make the pushes, you can buy the pullbacks, and we'll talk about that, but I don't want to get you off track right now. Maybe we'll invent I'm thinking about maybe an advanced class for, like right now we have maybe junior apprentices. When you graduate and start having success, maybe to have the class, you have to show me a consecutive equity curve going up with some good trades, and then we'll teach how to buy and sell the pullbacks in the range or something. Right now, I want you to focus on the most important element of the business, is making money and becoming successful and having a 6-figure day or 7-figure year. That's why you got in this business in the first place. And I don't want to cloud your judgment because I want you to understand you buy and sell at the extremes of the range. There's other opportunities to add to your trade. The guys offshore have not had their leverage or anything changed on them. The ones onshore, we have to, that FIFO stuff, it's a little different now. So I'm trying to get some workarounds for that. I know that we're trying to find good dealers. I know Kim and Scott over at Compass are working with dealers trying to figure out ways around this stuff to keep our leverage up, different things. I don't know if that's ever going to happen. The government, you know how the government is. They're hard. But if it does happen, you'll be the third to know. Scott will tell me, and I'll tell you. Third to know. All right? I promise. Okay, so everyone's good? All right. I hope that chart started tying things together for you. That was the point of it. We're going to go over some more charts, though. But I want you to understand that the prevailing theory out there is to get you to chase the stop hunt as perceived momentum. Perhaps run your fib extensions, Jim, if you're in here. Or maybe your AB equals CD projection. Maybe take a breakout or two, chasing it. But these are market myths and will always lead to failure. How do I know that? And I'm not trying to be arrogant, I promise. This class wouldn't be going on right now if that shit worked long term, right? These things slowly erode your equity, but because you get some right, you have a 50, 60% hit rate and you get some right, you constantly refill your account with your hard-earned money, thinking that this time you're going to be different, you're going to be more disciplined, this time I'll do it, I'm going to read that book about psychology again and try to have the trader's mentality. That's not going to lead to success. A 50 to 60% system is very difficult to trade. There's systems out there that are 30, 40%. That's why when somebody does it with success, they rise to the top of the industry and they're like a guru. Oh my God, I made 90% last year on my money. I'm God in this business. Man, you could make that before breakfast with what I'm teaching you. Okay, we got a letter from a guy a couple days ago. I posted it. He nearly doubled his account in 4 trades. That's 25% a trade. I'm not telling this to impress you. I'm telling this to impress upon you. I like that. It was pretty good. I have to write that. To impress upon you that it can be done, and it's being done every day in this group. If you feel lost, that's why the recordings are there. I want you to listen to that. I guess what you need to do, let's do this. Let's talk about this for a second. Okay, tomorrow's Friday night. I'm going to dump a bunch of material on you. Okay? You've got a lot of stuff in your head. You're probably like, man, this guy's nuts. I don't know what I'm going to do. Some people have been here 2 and 3 times to try to help master this stuff. That's why you have an unlimited ticket with me. Okay? So what I need you to do is maybe tomorrow night, just take the night off. Don't look at charts. Don't look at nothing. Just take a breather. Saturday, relax a little bit. Go out, spend some time with your family because you've been sitting here every single day. Sunday, I want you to come to the breakout session with Zen for an hour, hour and a half, and nothing else. Okay, don't do any charts, don't do anything. Monday, I want you to organize your notes and see where you feel weak, and then go back through the recordings and get that information for yourself. The market's going to be there, man. It's been there for years. It'll be there for years. The patterns are not going to change. You're not like, oh, I got to hurry up and get these patterns before they change. They're not going to change. If you don't believe me, pick a chart at random 10 years ago and look at it, and then you'll be like, wow, the shit's in there. Okay, that's how I want you to absorb the process. It's something has to happen to you. Joe, there is a Sunday class. It's a breakout session, not with Carr, though. It's for technical indicators. I'll announce it again at the end of the night. Okay, something has to happen to you. Something has to change inside of you. It's like that stupid 3D picture. You have to flip. A switch has to flip inside of your mind for you to understand what I'm teaching you. The worst thing you can do is switch to a 10-minute chart, add some indicators, and try to improve what I've taught you. I'm not so arrogant that I don't think it needs improvement. Sure, I always need improvement, but I don't want you to confuse yourself anymore. If you start mastering it and seeing it, then you're like, you know what, I see it, but Steve, this helps me. Great. But if you don't see anything right now, you start adding shit to your chart first day out of the class, I promise you, you're going to waste time in your life. Okay? The students that have done the best have went right out of here and did exactly as I'm illustrating for you and not changed a thing. Okay? That's what I want for you guys. I promise the transition will be faster. All right, this is one of my favorite charts. You take the AB projection, validates the orders long, and you're like, AB equals, oh crap, why is it going down? Okay? Stop, hunt, high, drop. But people take the continuation from yesterday and don't understand the cycle is 24 hours and changes within that 24-hour period based on how the contracts are straddled, nothing else. Remember, the market maker sets the trend. It can change it at will. Scott put something up here. It's very important. Indicators don't help you pick out the high and low. Your brain helps you pick it out by watching the board and understanding how they're working. All right, Paul added too. Been there, done that. Added indicators, not done the homework, did different stuff, tested stuff out. It doesn't work. It's a waste of time. I promise you that I am handing you everything you need to be successful. And if there's something else out there, it's because I don't know about it to help you. Right? What I want you to grasp is the concept of how the market makers work. How they handle the high and low, where the money lies, and how the straddles work, or how they straddle the consolidation zones to accumulate contracts. That's it. Everybody goes through this. It's just part of the learning curve. I'm trying to save you the pain of not going through that part of the business. Some of you guys that are brand new, you're going to start doing this and be like, man, this is too easy. There's got to be like some secret sauce that's missing or something. There's nothing missing. I'm not holding anything back. I'm not like, oh, good, glad the class is over. I can give out the secret indicator now. That's not what's going on here. I am giving you concepts of the scheme of how these guys work. It's almost like the defensive scheme of a football team or a defensive scheme of a soccer team. I'm giving you the scheme. Now you have to work within that structure to make money. Okay. All right, look. You expect the fib retracement? Coming out of level 1, trading back towards the peak doesn't happen, right? That's a V1 or an A1 day. We pass on those. Fib retracement, not. Okay, exercise. We're not going to do that. All right, actually, yeah, let's do this. Make a list of all the patterns I showed you, talked about, that set up a reversal. Just number your paper like 1 to 10, 1 to 5. Jot a couple down. I'll give you like 3 minutes. Try to blurt them out real quick, and then I'll put the list up, okay? Go. All right, ready? All right, half a Batman, upside down half a Batman, inverted, right? Evening, morning star. The candlestick patterns that lead to reversal. Spike to the low, vector. Spike to the high, vector, right? Railroad tracks, 2 pins to the high, 3 pins to the high. I didn't list it. Extended consolidation after the pattern presents. Right? That's a reversal signal. They spike the low and go into extended consolidation into the next night. They'll do a straight rise out of that, or they'll spike it again and then rise. Okay? Right? Okay. Half a Batman. Upside down half a Batman. Evening, morning star. We know what that is, right? An extra doji in there, an extra 15 minutes for them to snag you. Spike to the low. Spike to the high. 1 candle straight up. Railroad tracks, you know, in and out. 2 pins to the high. Boom, boom. And we can't forget 3 pins to the high. Got to add that. Right? And then an extended consolidation. They'll spike the low, pull a half a Batman, and go like this into the next day. You'll see that a lot. It was last week on Euro. It did it perfect. Then the stop hunt was mild coming out, and they did a straight rise. But what they did is they made the trap move after a big drop, and they held the level, and then they went straight up. Okay? Write these down. If you don't have them, write them down. I'll give you a second. This is important stuff. This is all part of putting the pieces of the puzzle together. Now, you put these patterns at the appropriate time of day, between 3 and 4 o'clock, between 1 and 4 a.m., right? Ideally, 3:30 to 3:45. If they make the Batman here at 3:45, that's your low for the day. Right? Think about this for a minute. They spike the high and make the Batman ear at 3:45. They close. Let's say the first one comes in at 3:15. The second part of the ear comes in at 3:45. And it goes into consolidation. You got it, man. That's your move. 30 to 90 minutes they hold. They don't start moving the market until about 4 o'clock. 4:45, an hour later. Then they start to roll over and the shift comes in. That's the stuff I'm talking about. Okay? Okay, third pin to the high, guaranteed reversal. Third pin to the low, guaranteed reversal. All right, hope you guys got that. If not, I hope you wrote them down now, memorize them. What's kind of cool to do is to go back and take snapshots of these, like this. And then, like, that's what Carr did as part of his homework. This is railroad tracks. Okay, and then it wouldn't hurt you to go like this. That candle is 35 pips. That's a nice set of railroad tracks. This candle is 38 pips, a little higher, whatever. It wouldn't hurt you to do that. If you want to do it and send it to me, I'll look at it. Be happy to look at it for you. Okay, that's one pattern, right? Then you find a half a Batman on the chart. Go back and say, wow, Euro had a half a Batman. Or there was an extended consolidation after the spike, and it went up. That kind of stuff. If you take the time to do it, I'll take the time to look at it, right? Spike to the high. Big monster bar. Find that. You know what? How big was that spike, man? What can I teach myself about the spike? And that was a 50-pip spike and a pound cross. And then they went into consolidation off of the high on the next bar they opened. Right? Start training your brain to identify the market maker behaviors. Right? Maybe put them on flashcards and let your wife flash them for you and say, spike to the high, half a Batman, extended consolidation, vector 3 to the high. I know it sounds really stupid, I guess. But that's how you got to see it. You got to recognize it like that. Identify the pattern and know the reaction. Market maker throws a spike to the high. Your reaction is short off of the spike. Right? That's what I'm talking about. A spike to the high is an engulfing pattern. It's an outside bar, whatever you guys want to call me. Call it, call me, whatever, okay? That's what I want you to do. It sounds crazy, but the students that are having success have done that. Carr's done that. He took snapshots of all the patterns and has them in his book. They're part of helping him understand what's going on, okay? And that's what I want for you guys. You got to be able to recognize this stuff. All right, if you haven't figured out, we've been talking about the high and low of the day all day. Okay, I'm just going to help you identify it a little bit better. Certain behaviors at these levels will help you identify it. Right? Pins to the top, come back for the stops. I'm going to break the structure down for you now. How to anticipate the high and low. Okay, we have the boxes that draw it, but I want you to take the Asian consolidation. How do you anticipate that? The trading zone is set 25 to 50 pips above or below. You simply look to the left for the last 3 to 5 days, what's price been doing? If price has been dropping for the last 3 to 5 days, then going into tonight's London Open, you expect a reversal. Why? Market makers been laying out their money. They got to get some back. So now you anticipate, hit the stops down, rise. Hit the stops low, rise. If he does that, you take it. Simple. If he works the low and issues you second leg W, you take it. Understand that. Remember I showed you like how he takes all that work back in one bar? All that stuff bouncing around and looks crazy and you can't figure it out. And it's like, man, is it going up? Is it going down? Is that a W? Is it an M? Oh, my God. Right? That's what a lot of people said about CHF. They said, oh, it hit to the high, made a W. Okay, well, you could have took the W back up, but you have to realize when he throws a pin right above the high, you got to scratch yourself out on that if you're going the wrong way. And then if you still weren't sure when he issues the third leg, you own him. That's the direction. Opposite of the third pin to the high. Okay? That's the kind of stuff I want you to do. They act crazy in that range because when they come back, they make the second leg. That validates the ABCD pattern. Then it looks like an M. Then it looks like a W. It validates the 1, 2, 3 up, the 1, 2, 3 down. It's on purpose. The only thing that should concern you is they're working the high. Did they take the high out? All that crap movement around in there, nothing. Nothing to be afraid of. It's on purpose. Market makers shift it back and forth to drive traders crazy. Think about your previous skills. How many times looks like it's going up, I'll take it. Looks like it's going down, I'll take it. It's going up, I'll take it. If you've done that, and a lot of us have in the business, I'm guilty of it too, man. Man, that looks up, I'll take it up. Looks down, I'll take it down. Shit, which way is it going? I'll go up again. I've done it. Okay? When you see that volatility, that's on purpose. They're jamming people, man. And when you understand that, you're ahead of the curve and ahead of the game. Okay, I can't say this enough. You've got to stop thinking like a retail trader. If you've read a bunch of books, if you've read a bunch of tapes, listened to a bunch of tapes, you've got to get that crap out of your head. There's a guy in Las Vegas, I don't know if he's here, Roger, I love him. He said he had a closet full of books and tapes that probably cost him between $30,000 and $50,000 in education. And he said all that stuff was floating around in his head. And I know Ray was working with him and helping him. I'm happy to report that he's doing really well. But he had a bonfire and burned all that shit. And if that's what you need, if that's cathartic, if that's what you need to get that stuff out of your mind and put it behind you, let's get some coat hangers and some hot dogs. Invite me over, man, and we'll put them over the fire of the tapes and books. It'll be fun, actually. Okay? Let's have a big bonfire and burn all these other books that are out there. No one's ever going to tell you those books are wrong because it's making them money. So you've got to stop thinking like a retail trader. Start thinking like one of these guys. Okay, the high and low are extended quickly to trigger the stops and create a panic in the marketplace. They create the spike to make you think you're missing the move. They trigger the stops of the people that had it right. The market makers will cut the initial high and low in 3 moves or swipes to try to change your psychology to their fake thinking, to the fake hand that they're showing. Okay? The job is to induce you to change your direction and recommit your funds the wrong way, which you think is the new direction, right? Here. You thought the bias was to the upside. You're not sure? They spike down. You might have been in here long. They hit your stops somewhere in here. You're a weaker long holder. You can't afford big stops. Okay? They come down, spike. That takes you out. They form the W. Crazy in here, right? They push down, pull back, push down, pull back. They might do it a third time to make a big congestion mess. Chest cold, right? Consolidation. They're working the contracts. Then they shift the zone and go on their merry way. And you were right all along. Then what happens is there's some amount of volume here that gets stopped out. When they see it break down, they feel bad. They cancel their volume over here. And you go, I want to be a short today. I want to be with everybody. I don't want to miss something. That's what's going on there. Okay, thank you, Cynthia. Okay, important. At the high and low of the day, write these down. The candles will show wicks in the direction that he's trying to work. Very important. Candles to the top side when he's working the high, candles to the downside when he's working the low. Wicks, I mean. Pins or wicks, whatever you want to call them. Okay? That's telling. All of a sudden, the pins are pointing down out of nowhere. Like, why are those pins pointing down? Duh, I'm at the low of the day. Another thing that's telling, the spread will open up. The spread is one of his weapons against you. He opens the spread. Okay, here's what happens with the spread. It's kind of crazy. Okay, you have the bid and the ask, right? You have two lines. And on your MT4 chart, you'll be able to see this. Then we'll show you how to do it on Sunday. What's going to happen is the spread stays a variance of 2 pips, 2.5 pips on, let's say, GBP or Euro, depending on the dealer. Okay, it stays around 2 pips, 1.5. It varies in that range. All of a sudden, when he gets to the high of the day, up here, let's say the candles are here, this is what he does. He takes the spread and whips it like this right into the candle range, and the top piece goes like this. Almost like an aneurysm. I guess he gives people aneurysms. Right? And then it comes back and calms down and goes back to the 2 variance. That is why the spread on the right-hand side of our indicator list includes the spread monitor. Okay, understand? That's what happens is he has orders trapped in here. He doesn't want to allow this side of the trade, this goes for up or down. He doesn't want to allow this side of the trade to come up here and see a profit. You might click out. So instead, he holds the level on one side, whips the spread over the top, picks up the pendings, grabs the other traders, fakes them out, turns their orders hot, and then he controls the spread and brings it back, and that's when we enter the trade. Thank you, James. Yes, that's why they did that. When they open the spread, that's part of their game. If you notice, if your dealer happens to let you see the spread widening, you don't trade till the spread calms down. Why would you get in here and pay the spread when you know in order for him to start moving, he's got to whip it back into range and go back to the 2+ variance? Right? That's a huge part of the puzzle. MT4, you can see it. Some dealers, you can see it. Some banks, you cannot. Some offer a fixed spread. Some offer variation spread. If you can get a fixed spread dealer, and Kim and Scott will be able to help you with this, but you know of one that varies, monitor the varied spread chart and trade in the fixed spread dealer. Ah, now we're using their information back, CIA stuff. I can tell you, but I have to kill you at the end of class. Right? If you want to see the spread, use a varied spread dealer to identify and a fixed spread dealer to trade. Okay. All right. Understand? That's what the spread looks like. That's what they do with it. Okay. The zones will be worked for 30 to 90 minutes. The 30 minutes has to account for the railroad tracks. 15 in, 15 out. 90 minutes, but up to 2 hours. It will go up to 2 hours before they get the structure right. The market will seem fast. You'll look at the high-low board, you'll look at the market, and all the things will be flashing like Christmas. Red, green, yellow, red, green, red. Right? All the stuff's moving around, but the prices aren't really going anywhere. Try this in demo, please, a couple of times when you think it's near the high and the market's all flashing. Throw an order on and watch how the order doesn't move. It won't go anywhere. Just sit there. But the spread's opening, the board's flashing like, wow, there's a lot of activity, but nothing's really going on. I'm not up in my trade. I'm just sitting there on the spread. It's not moving. And adding that order in demo will further help you understand that you're grabbing the high and low right near where it is. Okay? Try it. It's amazing. It's cool. Once their goal is achieved, they will shift the zone off of the high or low of the day in 1 bar, sometimes 2. Remember, get the hell out of there. I should put parentheses. They got to get the hell out of there. They got to get out of there to grab up the money before anyone changes their mind, before the bulk of the traders click out and change their mind. So it's a quick, aggressive move off the high, a quick, aggressive move off of the low. Because here's what happens. Think about your mentality a minute. You're -5 + 5, -5 + 5. You worked hard for your money. You deposit in your account. If you're trading one mini lot plus 5, I could live with $5. You're trading a standard, I could live with $50. If they shift the zone 25 to 30 pips, you are now down $300, $250. You can't stomach that. It upsets you to throw away that kind of money. So the shifting of the zone will come quick to trap the traders and make them upset about losing the money. Trading two standards, you're down $1,000. You might make $1,000 a week at your job. Now you don't want to throw away a whole week's salary. Whatever the mentality is that has got you to behave like that. Okay? So understand that the shifting of the zone to trap the traders is a psychological mind. I can't say the word. I don't want to say it. You know what I mean. All right? They're messing with your mind. And that's horrible. Don't fall victim to these guys anymore. Understand their tools. The spread widening and closing back is part of the system. Okay, so here you go. Here's the low. They come in here and spike it for about 1 hour. They work it. Notice how the pins turn to the downside. There's the low of the day. Set, and they trade off of it. Outside structure? Absolutely. Trading inside the range for 45 minutes after that. Start shifting the zone. Gone. Too late for these guys down here. They're having a bad week. By the way, Anna, I don't know if you're here tonight. I was thinking about you. I got your emails, and I answered you. And Anna had a 100-plus pip night yesterday in her live account. Very proud of her. If you know anything about Anna, that's a huge accomplishment. No offense, Anna. I love you, man. I miss my macaroons. Okay. She sends me cookies from New York. I don't know if you guys what you were thinking. All right, once the high and low is established, there will be a big pullback of 25 to 50 pips. Think what just happened. I just explained it. They shifted the zone and trapped all the traders. Stops of the weaker traders are hit in both directions. Then all the patterns and textbook technicals have now become validated. The traders are stuck and watching it run. Stopped out the wrong way, standing aside, there it goes. Man, I was right. What happened? All right, here is the exact W. This is anatomy of the W. I love this W because this came right after the December webinar. I think it was kind of cool. There's your spike to the high to pick up the pending orders of the breakout traders. This is more than 3 hits to the low. Obviously, variation on the theme, but it's like crazy, man. It's like rounds out. Go look. This was, I think, the pound in December of 10, I want to say, sometime in December. Pretty cool, man. Look at that. It's beautiful, okay? So this is what happens. Here's the anatomy of it, all right? Let's break it down. The anatomy of an M or a W. They spike the low to create panic and show a direction. They pull back quickly. This pullback does what? Anybody? Hits the stops of anybody that went short in here and thought they had the short. Right? And now it also shows long. Grabs the stops, right? Okay? Anybody that thought they were long here and had it right, they come all the way back. What does that do? Sell the rallies in a downtrend. It pushes it back down and makes people validate or think that it's going back down. It's kind of dirty, man, when you break it down, right? They then get people thinking short, stopped out long, stopped out short. Stopped out the longs, take their money back, show short again. Right? Now what happens? Then they do it again for all the people that said, oh, that's the rally in the downtrend, let's take it all back. Then they go into consolidation right here to confuse you more and to think this still. But the lower day is established, they hit the stops of the longs, and then you're out now, and then you watch it run. You were right. They stopped out the long holders, came all the way back. If you move to break even, they scratch you out at +1. Right? Now you're stopped out. You're sitting there. I know it does make you mad, doesn't it? Some people saying watching this pisses me off. Pisses me off too, man. Sorry. You know what, though? Now you know. Okay, then there you go. Then there's your structural break. It's gone. Right? They shift off the low. You're in profit. They hold the level, +5, -5. You're around here. Then all of a sudden, bam, 45 minutes, you're in. Take profit. The high of the day is reached. There's the tracer right there, gone. And if you notice something kind of cool, when they make the run, 1, 2, 3, 4, 5, 6 bars before you even see any weakness. That's an hour and 15 minutes of straight rise. Right? Straight rise. Where's the drawdown? Where's the stress in that trade? You're up from the beginning. You're up in the first 15 to 30 minutes. You're in profit. Then it teeters around a little bit. How do you know the trade's still good? The low is not taken out. The low holds. If the low holds, trade is good. If the high holds, the trade is good. Right? They shift off of here. Notice how these 2 bars, right? These 2 bars take out all of this work. That's what I want you to realize. When they shift that, all their work is done. They got everything they needed. They faked everybody out, beat the crap out of everybody, grabbed all that money. Think of all those traders that are following that textbook stuff and got jammed. It is evil. It really is evil. But now you know. Okay? And then you got an hour and 15 straight rise to profit. Level 2 consolidation perhaps. They start the next move. You should be out in here somewhere. You got your plus 50 like nothing. All right? Yeah, Dave, for sure. Okay, variations on the theme. 1, 2, 3 to the low. There's the pin. Ends on a hammer. Enter here or here, second leg. I want you to get in before the shift. 3 to the high. Enter here or here. When they issue small candles, it's beautiful. Sometimes they'll issue one candle big and shift it away from you. It's a tough entry. Stops too deep. Okay, consolidation. Vector to the high. 1, hold, hold. 15 minutes. There's a 30-minute hold in there. Hit it again, hit it again. Break up, see what we got. Anybody falling for this shit? Yeah, all right, they're not. Go again, go again. Now they fell for it. Got them. Right? Remember, why would they do that? This costs nothing. It's free. 30 minutes is free. This costs money. This costs money. It costs them money to move it. So this is free. Once they get up there and stay there, it's free. Doesn't cost them anything. They already have their equity committed. They're like, all right, is anybody falling for this? Not really. All right, hit it again. We got to spend a little money on this tonight to get it to go. Hit it again, hit it again. Haha, I got you. Sorry. Okay? If I'm pissing you off, I'm sorry. I'm not trying to, man. There it is. There's your exit. 3 levels of rise off the bottom. Look for the reversal. Timings are everything. Okay, look. Come out of the low. Hit it. Hang around for a while. They didn't fall for it. Hit them again. Aggressively. Hit them again. We got them. All right, pull right back. Trap the lower level holders. Low of the day is set. Let's give an inside structure. Work the area for a while. Let's hang on. Let's hold the low for 30 to 90 minutes, up to 2 hours, and see what happens. All right, we got the development. You know what? Let's validate the traders that think short on here. Let's grab them. Let's take the stops out of the guys that went long in here, and then let's make our run like we planned it to anyway. Okay? Come back for the money. Come back for the money, move. Come back for the money and move. I need a sip of Coke. Hold on. If this stuff doesn't piss you off, something's wrong with you. If you've been trading this the wrong way for all these years and it doesn't piss you off, something's wrong with you. Maybe you shouldn't be a trader. But now you know how to get your money back. Okay, we're in the middle of the year. I want all of you to turn the corner by Christmas. We're all going to have a good Christmas. All right? Maybe we'll go skiing somewhere. I don't know if Luther's here tonight, but he's a ski instructor out in Colorado. Maybe we'll all crash at his house. Is that all right, Luther? Can we come? All right. I don't know. I don't see him. But if he was here, I think he would give me the bird sign. If you could do that in chat, I don't even know how. All right. So here's what I'm telling you. What I want you to do is simply buy or sell the third level stop trigger. The 3 swipes. You buy the third swipe when it's a down swipe against the trend. You sell the third swipe to the high if it's against the retail trend in line with us, our peaks. The better trade is M or W formation. Complete the M or W formation. You're not always going to get the M or W formation. Sometimes you're going to get an extra leg, and you're going to have a triple top, triple bottom. But if you can exercise the patience and understand this, it's game over. You own it. Okay? I want you to take positions without fear of loss, understanding the structure of the market, and to become a master. You got to look inward because you know now what they do. Okay? The best way to trade is to buy or sell in the consolidation levels when the market comes to rest. Don't chase price. Don't chase after it. If it's spiking, why would you chase it? You're not going to get a good fill. The dealer's going to give you a shit fill at the bottom or top of the candle, depending which way you're going. That's his job. And then once you click that button, the order gets locked for execution. You can't get it back. So that's why when they make the spike to the low and pull back and they're hanging around like this, you calmly place your order in the zone. Off of the low or off of the high, and then this is what you expect, right? There's no reason to deal like a madman, get crazy. The best trades are to buy or sell peak formations in level 3s, right? Peak formation I showed you on the EuroCAD chart. The anchor point for the trend reversal was made. That's a David Gian swing trade setup. That's a Bruce swing trade anchor point setup. Those anchor points can be used as swing trades for 2 to 3 days in the cycle for 2 to 600 pip grabs. Okay? That's part of the trading cycle. That's part of what I'm teaching you. A lot of you want a spot trade, and that's what I like too because I don't have the personality for that. I can't go to bed with a ton of lots on until I'm flat because that's what I told you to joke around, but it was serious. I had my laptop on the night table. I had a computer connected to the TV, and we're watching TiVo, and I'm like, turn that screen on real quick there, honey. Hit source and go to HDMI input. She's like, we are not going to do this in our bedroom. So you got to make a decision how you want to trade, how your personality works, okay? Only trade on closed candles. Don't chase a candle. Why? Because you could have a spike all the way down and you think that's the low, or you think you want to short this for whatever reason, and then within 15 minutes when it's over, you could end up like this as a hammer. You guys know this stuff, but I want to illustrate it for you. You could end up with a hammer, and that's a whole different picture of what just happened. So that's why we trade on multiple confirmations. Box is 50 pips. The candle is vector 3 to the low. They issue an outside structure. They pull off and trade. They consolidate inside the bar. They issue another pin back towards the low, fail to take out the low. I'm a buyer against the trend, against the retail trend. That's how the structure sets up, okay? All right, I know it's dinner time. I'm going to stop in a minute. Hold on. Okay, so here's what you do, man. You react to the market maker's actions. You sell upward stop hunts. You buy downward stop hunts, but only after the market comes to rest. No chasing. When the signals and multiple signals are there or appear, you enter the market at a market order. Always be prepared for one more move towards the stops. If he does it, if he issues the second leg and closes with a pin, just like I showed you in CAD or CHF or Euro, if he issues the second leg, you own him. He's yours today. Okay? So to take this one step further and oversimplify it is this. If he hits the stops to the upside or high, you sell. If he hits the stops low, you buy. Of course, you have to be cognizant of the cycle, the WVVM, that stuff, but this is what happens. You react to his actions because his actions are going after the cash. So if he hits the stops high, he's stopping out short holders and inducing longs. You sell because his next move is to roll it over and pull or correct. Okay? All right. So I should put a little picture right here because I can draw. Look. Consolidation. He hits the stops high, vector 3. You're a seller because you expect this. If he hits the stops low in 3, you're a buyer because you expect this. Okay? It's opposite of what the retailers see. All right, this is a good place to stop. Let's do a 30-minute dinner break and figure out, here's the deal. We're going long tonight. We're going to 11, maybe later. I don't know. Because I brought in some guests that I had scheduled for Friday, but they had some difficulty scheduling, so we're going to do that tonight. And we're going to do market maker biases. We're going to cover WVVM, MAAW. We're going to cover that stuff tonight. And we're going to show you the biases and mark up some pairs. I'm very excited that they're here, that we even got to get them I act like they're like celebrities. They're my students, but they're going to be in here tonight instead of tomorrow night. All right? Tomorrow night, we've bumped Zen off the roster. I feel bad. But tomorrow night, Zen will discuss with him and his wife how they take U.S. session trades because they have a lot of children, and that's the time of day that works best for them, that segment of the market. So that's the agenda. If those of you absolutely cannot stay, I understand. Mark the tape. Remember, it's, I don't know, day 3, 10 o'clock, and then you can watch that segment in the recorded venue for the next 2 weeks and go over that piece. If you can't stay, I understand, all right? But my goal is to get the material without burning out your brain. And some of you, it's late. I understand all that stuff. So let me pull up a 30-minute stopwatch over here. We'll take a break. And I'll see you back. I'm going to eat something. I'm hungry again tonight. I don't know what happened. I'm eating too early or something before class. Okay, so before the break, we were talking about how the market maker behaves, and you just take what he gives you and react to it. His actions warrant a decisive reaction by you, now that you understand. Okay? Okay, so now, let's talk about stop-loss levels a little bit. Managing your stop-loss levels. Market makers trigger the stop-loss levels in 25 to 50 pip increments, depending on the pairs. And I'll give you the numbers in a minute. If your stops are triggered, don't panic. That's what he was hoping. He was hoping he would create panic inside of you and scare you out of something that you know is right. The way to handle that is to buy or sell at the next level strike zone and continue trading through. Profit is going to be realized if you understand this. Think about this for a minute. There's 3 levels of rise, right? Eventually, you're going to stumble into the money. I think I have a slide for that. Okay, so here's what happened. This is a real setup. This is an Australian last year. Grab a pen, okay? He cut the low in 1, 2 aggressive, 3 tap. Right? Push, hold, aggressive, tap. Okay, some people can't see this. I have a slide up. I have a stop-loss slide. Can everyone see? Am I still online? Still good? It can hear me, everything, right? Yeah. All right, it's you. Reboot, come back. Okay, cool, thanks. The majority can see. Great. All right, so look. Comes in, you try to anticipate the low, pulls back, holds the structure for a while. This looks like a good place to maybe get long next to the low of the day, somewhere in here, right? Here's what happened. He didn't have what he needed. So he hit it again. And if you measure straight down, it is exactly 25 pips to the middle of the consolidation zones, or you measure low to low, either way. 25 to 30 pips. He hits the next level. He did that on EuroCAD last night. Measure it. Go look at it. He showed a formation that looked good for a drop, and then he hit it again one more time. Then the correction came. That's a common behavior, where he comes in and hits it one more time because the contracts are straddled in such a way people aren't biting, so he makes them bite. He hits it again. It's normal. Don't panic. When he settles in the next lower low of the day, you do exactly what we've been doing. You look for your entry. If you were stopped out for 15 or 20 pips and you're going for 50, you hit your take profit, you're out. And you're net positive for the 2 trades. Net positive for the cycle if that's your trading cycle. The goal is to always end net positive. If your stops are triggered, don't go into a panic. That's exactly what he wants you to do. Don't stand aside. Don't go on vacation. Just simply evaluate the market, wait for the next level drop or rise when he shows you the next pattern, and then take it. Okay? Let's look at another example. This happened live. This is a real chart. Okay? He came out, he cut the low. in 3 moves. He went into consolidation. This looked like a nice, aggressive, blown out box down here, about 50 pips. Looked like a nice, solid stop hunt. 3 vector candles to the low. He quickly went into consolidation. Okay, he held the level for about 45 minutes after he set the low. Traded above. Everything looked pretty good. The anticipation was this. Okay? Isn't this funny how he did 3 vector candles to the low again and issued a hammer after he spiked, and he did the same exact move. He traded inside the outside structure, the spike to the low. This became the LOD. Okay, the entry could have been anywhere in the consolidation or even here. It's a little late. The trade went for a 275 pip profit. If you would have stood aside and cried, or I have to say it, kick the dog, beat your wife, or beat your wife and kick the dog, you would have missed the opportunity on the next level strike zone. Okay, since you know how the market is structured and you know that the stop hunts vary based on the volume buildup on his side of the screen where the contracts lie, it's not unusual for him to trigger the stops one more time. Yeah, August 1st, he went higher one more time on Euro. Yes. If they do it multiple times, take it 3 times. What are you afraid of? If you're controlling your loss, you're going to get it. But it sounds to me, if they're doing it 3 times to you, that they're making 3 levels the other way and you're going the wrong way. You're seeing it wrong. That's what I think. But Tommy, I know, man, send me some snapshots of what you're talking about. I'll spend some time working on that with you. Okay. Your bias is probably wrong. If they're hitting it, look, there's 3 levels, right? I told you that you take the ADR divided by 3. So let's just, for argument's sake, say it's 150 pip ADR. So divide ADR times 3, you have 50 pip zones, right? So if you get stopped out 50 pips, boom, they hit it again, 50 pips, stopped out, boom, hit it again, you were going the wrong way all day. That's what's going on here. That's the ADR, and you tried it 3 times, right? Fortunately, eventually it's going to settle in. Hey, Dana. Right? There are 3 levels of drop or rise. If you're going the wrong way, you can only be wrong 3 times. If a pair moves 150 pips ADR, simply buy or sell at 50 pip increments, and eventually you're going to stumble onto the money. Right? You'll fall into it. But that's not a real strategy. That's not what I'm teaching here. I don't want you to be wrong 3 times in a row. Okay, I want you to understand that you got to have the right directional bias, the WVVM, MAAW. Make sure you understand which way you're going. That's more important than chasing after a bad trade. That's amateur stuff. Don't do it, all right? But what I'm telling you is that if you see a chart like this that sets up properly, this chart set up properly, didn't it? Market maker's first move out of the box was vector 3 to the bottom. He issued a spike to the low and he pulled back, traded above the structure. That looks good to me. Okay, the anticipation was back to the mayonnaise for an easy 50 pip take. Blown out box, by the way. Okay? Then what happened? He analyzed, evaluated, and hit it again. 1, 2, 3 to the low. Why? If you didn't fall for it the first time, maybe you'll fall for it the second time. Maybe you'll bite short. He then, this is beautiful, when TDI or RSI is way overextended and he issues a hammer, that's go time right there. It's going. Okay? Entry here, here, here. Just don't miss it, man. And then he makes a painless 275 pip run. Man, in 45 minutes to an hour, you're up big. Took off. Then what does he do? End of the day, he reaches with a spike to the high. These pairs, yen crosses are notorious for this. He reaches to the high with a spike, hits it again, turns green, turns that candle inside out, closes below. At the appropriate time of day, red box. If you miss this trade, he comes back for a second shot at redemption right there for you. Right back into the range. Middle of the range. Ends the day. Back in the consolidation, start the next day aggressively. See it? Okay, yes, Lou. Right? That's what we're looking at. So if that happens to you, you know how it's structured now. You know why he went after the stops. You know that's his job. That's what happened. So understanding that, when he issues the hammer at the next level drop after 3 more vector candles, you got it. Okay? They needed to extend the low. There's too many contracts just below there. They can't stand it. They got to get them. They need to induce more people to turn short. If you measure the low of the day to the low of the next low, it's exactly 50 pips. It's amazing. They've read all the books, man. They know where you put your stops. Okay? You re-enter without fear. Without fear. Oh, man, I don't know. You should get in here with strong confidence. You got 2 sets of vectors straight down, 3 and 3, with a pause in the middle. You take that right back, especially on the issue of a hammer and trading above the structure, it's gone. You'll get your money back, even if you went just for 50 and got it all back and end the day positive, okay? Okay. Now, there's 2 types of stop loss levels, and you got to learn to get them tight. I'm going to tell them both to you. Once the trade is on, I call this the lazy man stop. A stop loss of 23 pips below the low of the day or above the high of the day should be used. That's the safest. See why it's important to get good entries near the high or near the low? Because a 23 pip distance is best. In order to be able to trade multiple contracts down the road with little to no drawdown, you got to learn to take second leg entries and become a master at them. On the second leg entry, you can use a 7 to 10 pip stop above the structure. All right, here's what I mean. If you get in here like this and you grab this, you become a master at grabbing this, that's okay. But your stop loss to be safe on this has got to be 23 pips. I don't know why. It's an odd or prime number. This is what I was taught. I don't know why, but it works. Because here's one of the reasons that I can tell you right off the bat. When they come back and pin the second leg, the pin is usually around 10 pips. With the spread, I've seen it as much as 15. Zen and Diane done some research on this. The 23 pips will keep you from getting stopped out unnecessarily. The reason I call it a lazy man stop is because you throw the trade on and then you don't have to sit there and worry about it coming back to the second leg. Usually you're okay. Every once in a while, the dealer's just going to get you. But that doesn't mean you go, oh, I'll use a bigger stop so I don't have to watch. That's not the business. The business is to pick the high and low with accuracy. Okay? If you have the mental strength and the patience to sit down and wait for the second leg to issue, this is where the multiple of contracts can be taken. 50 standards, because the stop loss goes right above here, 7 to 10 pips, right above. And if he takes out the second leg, you were wrong and you need to be out because you have a lot of contracts on. You don't want to drag that backwards. You'll bust your account. The only variation to this is if he issues a third leg and gets you, like CHF last night, don't be afraid to take it again with the same number of contracts, and then profit will be realized because the third hit guarantees the reversal. Pairs that have monster spreads, GJ, EuroCAD, I don't know, some of the yen crosses, the spreads are bigger. On the 7 to 10 numbers, you got to consider that. Because if he comes back and opens the spread on you, he's going to get you, right? You got to add the spread. So let's just say you got a 7 pip stop and you got a 5 pip spread. Add that in. 7 and 5, 8, 9, 10, 11, 12, 12, 13, right? I don't know. Somewhere in there. Terrible at math. Yes. Okay. Good stuff. All right, that's how you put your stop. Now, if you're watching your trade, if you're monitoring your trade, then what I want you to do is adjust your stop to break even or +1 when 32 pips of profit is seen. All right, let me say it again. if you're watching your trade, adjust it when 32 pips profit is seen. Okay, here's why. When he makes the pullback on the first part of the M or W, it's about 20, 25 pips, depending on the pair too, but around 20, 25 pips. When he comes back for the second leg and clears by 30, he's not coming back. Okay? On a majority of the trades, 99% of them, except for the third leg being issued, he's not coming back. He's got what he needed. His work is done. He's not coming back. So when 32 pips is seen, move to break even. I'll do you one better. If you don't want to sit there and watch, use a 32 pip trailing stop offered to you by the dealer. Even though I don't like it, it's better than nothing. Because if you go up plus 40 and you come back and have minus 23 or minus 10, I'm going to be mad at you. The stop has to be adjusted. A nuance to MT4, the platform has to remain open in order for this trailing stop to adjust. Now, I've heard some chatter, they're going to fix that. Some dealers might have, I don't know. But I'm telling you right now, the platform has to remain open in order for the signal to be pinged off the broker server in order for the stop to be adjusted. Okay? There's some EA scripts available. Rick gave out something that I think was in the forum a while back. I'll double check and make sure it's posted. It's a trade manager. Not necessary, Dave. You don't have to spend your money on that. Okay, but anything that's given to you, I want you to test it in demo. Please, please, please test it in demo before you put your real money on it. To make sure you understand how it works, that it can handle the pipettes, which is the 5-digit dealers, which they're all going to now anyway. Very few dealers are left with 4 digits. I think overseas there might be, but over here in the States, everything's pipetted. And is that even a word? I don't even know. Okay? Adjust your stop into the trading zone when 32 pips of profit is seen. Not a pip before, okay? Because here's why. A lot of you get excited, you get jacked up, you see you're up 20, 25 pips, you move your stop to break even, dealer comes back with the second leg and takes you out. Thanks, Greg. And you're like, Steve, I don't understand. I had the right. Why did I get taken out? Because you made an amateur mistake. If you are right and the dealer doesn't come back to that level, you will not get stopped out unless you move it too soon into the trading zone, and you're going to deny yourself the opportunity to book the 50. Okay? This is part of trade management. Okay, let's just say what I want you to do is, all right, you're out of the class, you're jacked up, take a little break, spend some time with Zen Sunday doing the thing, watch some recordings. Next week you want to trade. Open a demo or a micro live. Start looking for the setups. Use a take profit of 50. Stop loss, if you're taking second leg, 7 to 10 pips above the leg. Nice tight stop so you can eventually grow to multiple contracts. As soon as the trade goes up 32 pips, adjust into the zone plus 1. Right? That's the trade management. You were 32, you're less than 20 away from hitting the 50. You're 30 away from your break even. You're in a good place. A small retracement pullback should not take you out because he's already made the second leg and you're safe. It's going to roll right into your TP. You're out. Okay? That's what I want you to practice. Think about taking that 3 or 4 times a week with 10 standards, 5 standards, whatever is comfortable for you when you become proficient. You're looking at a minimum of 10 to 50,000 a week. If you can't live on that, you need another mentor. I can't help you. I'm kidding. All right, Diet Coke, sorry. Understand that if you have a good grasp of the method, you're rarely going to be wrong in your trades. Those letters I showed you during the sales presentation, that's not bullshit. Those are real letters that were given to me. 9 out of 9, 8 out of 9, 8 out of 10 for the week. That happens to this group of traders. It's real. A lot of people ask me, Steve, what about stop losses? Remember I told you in the sales presentation that telegraphs to me that you don't know the proper use of stop loss and that you've been hit your stops a lot. That tells me, when you ask me about stops, I immediately know you've been stopped out to hell and back, and you're nervous about it. Your stop loss goes above the high of the day, below the low of the day, outside the structure. The market maker's not coming back for your measly stop order. I don't mean any disrespect to anybody. He's not moving a $4 trillion market back to get your stop order. Okay? If you're in the right segment of the market and your stop is placed in the right position, think for a minute. If he runs the market back up to get you, he releases the other $500 million that he trapped. You're not worth it to him. That's why our group of traders is able to book 100,000 in a day. Rick, sorry picking on you. Because they're not going to go back to get Rick, even though he's killing them. It's like 6 of one, half does the other. Are they going to release one hand and let go of 500 million, or run the market back up to take Rick out because he's beating them? Rick is the cost of doing business. You guys are now the cost of doing business. You're on the cost of doing business column in their books. They go up and take 100 million, or they and let it go, or they trigger your stop order for $5,000. Understand? Putting your stop outside of their reach ensures your success. The stop, and I think Kim will talk about this tonight, the stop becomes irrelevant. You're like, oh man, I don't know, the stop seems too deep, I'm nervous. You're thinking of your old retail trading ways, that's what's making you nervous. I'm not telling you not to use a stop. I'm telling you that when you pick the structures, the stop placement becomes automatic and you don't even think about it. You put it right where it goes bam, right above the high, I got nothing to worry about. They ain't hitting it today. I got this, it's perfect. 3 pins to the top, stop loss, couple pips above the high, third leg, I own them. That stuff takes care of itself. Risk to reward stuff, I know people ask me, oh, what about money management? What about this? I told you, risk 1% of your account when you're learning, ramp it up to 5%. When you become a master, use the leverage and kill these guys. Stick it right back down their throat. But the stop loss goes where it goes. If the candle spikes or they shift the zone on you and it's a 50 pip stop loss, don't make up some formula, take the shift bar divided by 2, add pi, and the stop loss can go right here midway through the candle. That's not acceptable. The stop loss goes outside of their grasp, outside of their reach. Remember how they come back to the second leg and open the spread and pick up the orders? After they do that and close the spread back is when we enter the business. That's when we do our business with them. Now the spread is closed back, it's out of their grasp. They can't get it anymore. They're not going to widen the spread for the same reasons I just explained. They're not going to go back up there. It's after the damage is done. Correct, Jim? So your stop goes slightly out of their reach, but enough to keep you from drawing down your equity if you're wrong. Okay? The idea of everything I'm teaching you is to be able to ramp up your contracts with confidence because you know how to trade properly. My goal for all of you is to trade 50 pips for 50 standards or 100 standards and trade 2 or 3 times a week and send me a cruise ticket to the Bahamas. Or pick me up on your private jet and run me around. Now we're talking. It can be done, I promise. There's people in here right now that are shy, but they're doing it. There's people buying new apartments. I know a guy ordered a Ferrari. I know a Subio bought a cigarette plant. Okay? You guys got this, man. I'm telling you. If you're confused today, after Kim and Cargo tonight, everything should start falling into place. If it doesn't, I'm going to work with you. Don't worry. The forum is a great place to start if you're confused. Okay. That's how you handle the stop loss. Manage the open trade by trailing the stop loss level by 32 pips or jumping it yourself if you're there. Jim Nicholson bought a fib factory. I'm kidding because I busted chops. He likes fibs. More good trades are lost by traders by moving the stop loss level too soon into the range. Market maker comes back for the second pass and he grabs you out. If you're right in the evaluation, your stop will become irrelevant. I know it's like, oh, Steve, I'm so worried about the stops. I swear to you, when you start hitting it, they're going to become irrelevant. You're not even going to worry. You're going to know it's right above the range, right out of their grasp, and it's not even going to come. Your stop won't even be threatened. And if it gets hit, you were wrong, reevaluate, next level strike zone, come again at them. Textbook and regular traders make big deals of the stop loss levels because they simply don't know and understand what you now know. The truths about the market that I've exposed to you, widening the spread, pulling it back. Conducting business after the spread comes to rest. These are things that regular retail traders are unaware of. You now possess this knowledge and know where the stop loss level goes. If you can accurately pick the high and low of the day, the rest of the business will fall into place and take care of itself. I promise. Can't stress it enough. If the spot trade gets captured at the midweek reversal and you happen to identify this while it's on, the trade can now be converted to a swing trade for 2.5 to 3 days. The stop has to manually be handled and brought in below the consolidation zones after the stop hunts have cleared. Otherwise, they're going to take you out, right? 50 to 75 pips can be used, but it's better. Trailing can be used, but it's better to manually adjust the stop on those because you don't know the variance of the stop hunts. Are they going to be 25? Are they going to be 50? I don't want you to get taken out prematurely. I know that David, Gian, and Bruce are becoming our master swing traders in-house. They will be sharing their strategies and techniques on one of the seminars on Sunday night. I know Carr's booking that. I don't know if it's set up yet, but they're going to be in there talking about their swing trades. They trade exactly the WVVM and MAAW, exactly if I've illustrated it, and they book anywhere from 200 to 600 pips on a regular cycle. They scale in a few times while it's running, and they call it a day. I know they did it already, but they're going to do it again for the new guys. Okay? Now, let's look at a swing trade scenario. Okay, we had the reversal, the anchor point. Here's the W anchor right here. Okay? Stop hunt, low. I expected this, reverse. When it clears the stop hunt, trailing stop comes in behind here. Okay, what do we expect? Another V night. Stop hunt low. They come in, do exactly what we thought. They clear the stop hunt. Stop loss comes in behind here. Exactly as we anticipated. Now we know the M comes. We take second leg M. A confirmed reversal. We take. Okay, why? Because 1, 2, 3 days have shown themselves. The next move is this, and this is exactly, go look at this chart. It's May 24th and 25th on the yen, and they took it all back. What did they do? Think. This trade started, look, Sunday, Monday. Over here, look at the tracers, right? See it? This is one of those things where if you don't know how to swing trade properly, you would have took this trade on entry, and you would have ended up getting stopped out at +1 at the end of the week. Okay, because market makers took it all back. And if you were here at +1, you would have gave it all back. That's one of those examples where they started the week at a price and ended right around the same price for little to no net change in the world economy. Okay? That's why you understand the cycle is 2.5 to 3 days or 3 levels of rise, WVVM exit. MAAW exit second leg. Okay? To book a run of anywhere from 2 to 600 pips. is available. GJ, 600 to 1,000, 1,100 possibly. GBP-CHF, same thing. Yes, Lou. Okay? You guys good? All right. I'm going to sum up the last 2.5 days now with some bullet points. I'll let you write them down. I'm going to go over them first, then I'll be quiet. All right? This is the most important bullet that I can tell you about market sentiment. It's crap. Market makers create a sentiment and act against it. They use news and rumors to take your money. You hear crap on the news that Euro's going up. Talking heads say Euro's going up. Forex Factory, everyone's, oh, the trend is up, trend is up. Just when you get comfortable with the uptrend, game over. They reverse. Okay? So what I'm telling you is don't listen to anybody's sentiment that's out there. Your job is to identify their behaviors that I've shown you here illustrated in the last few days. Okay, some important bullet points to remember. Just listen, put your pencil down, I'll leave it up there for you. The fast move in Forex is false. It is a fake momentum candle that really represents the first leg of the stop hunt. Never chase rising or falling currency. It's a ploy by the market maker to get you to commit. Market makers correct or drop the price so they can accumulate and buy. Market makers raise the price quickly to pump it and dump it to you, the retail trader. Market makers will extend the higher low in 3 moves quickly. The trend, the real trend in Forex is the market maker trend. It is slow and steady and appears to be relentless. It just won't quit. If you've ever been going the wrong way in that, you understand that. Market makers need to book a profit also, so the trend move will contain 20 to 25 pip pullbacks and 3 levels of move with corresponding levels of consolidation. The consolidation allows them to accumulate, trigger the stops in both directions, create false support and resistance on the chart, lighten the load for the next level correctional rise. That's not on there. Should write it, I guess. A powerful or extended move is always followed by consolidation to confuse the traders on direction, to validate the textbook BS, and to bring the traders back into the fray after they've been punished. We call that level 3 behavior. Ben, I don't remember. It's on the recording, buddy. Mark the tape. It is 9:08 p.m. Eastern Time. Go back 3 minutes and listen to what I said. He asked me to repeat that. I don't remember. Okay? I'll leave this up for a minute, then we'll do the next slide. I'm not going to stay too long because you have the tape. So just a minute. Let's start talking about some technicals and bringing them in. Some indicator stuff. The right technical analysis gives you a major edge, right? Not regular technicals. The way we apply the technicals to our stuff. All right? Listen, guessing is 50-50. We are not in the 50-50 business. We're not in the 66 out of 10 business. That's not the business we're in. We're in picking the tops and bottoms with laser accuracy, controlling our losses when we're wrong, and looking for the next level strike zone to profit from. We are in the 90% plus business. I know that if you've been in the business for any length of time, you're probably mumbling under your breath, this guy's freaking crazy. Go in the forum and see how crazy I am. People are doing it. It can be done. If one man can do it, any man can do it. By mastering the market maker pattern, you can reach your trading goals, whatever they are. Okay, so you've loaded some templates with Zen, and if you're having problems with them, you're going to reload them this Sunday. The scan view is a template that offers you a collection of the 1-hour charts. Sorry, Leah. Yes, a woman can do it too. Sorry. I didn't mean anything by that. If one woman can do it, any woman can do it. Okay. The charts are fractionally crossed. I'll show you what I mean in a minute. They help you determine the intraday direction, see the cycles, level count, market cycle, understanding where you are. I'd like you to draw the little squigglies on there to project. I want you to project where it's going, have an idea. And then don't act against your projections. That's how you do your checkdowns. Okay? The M or W formation, because it's a 1 hour chart, will a lot of times appear as railroad tracks or one candle that forms a spike. Because remember, there's 4 15-minute candles comprised in this one 1 hour candle, correct? So if it goes straight up, you get your vector 3 and then pull back, you might get a 1 hour candle that goes up and pulls back. Yes, the Sunday session will be recorded. Zan, if you're listening, it will be recorded and hung in there as part of the lessons. Okay? No problem. If you have something committed for Sunday, family day, I understand. They'll be in there. Of course, if it's with your kids, don't miss it, man. Okay. Now, here's what the scan view looks like. You don't have to have it set up like this. What I would like you to kind of do is keep an eye on the fractional disparity stuff, which we're going to probably cover tomorrow. I don't know if Scott's up to talking about it. If he is, I'm going to put him on the spot and on the mic. Okay. Notice we have Euro straight down here as Euro as the base pair, right? Straight down. This is Euros. We have the majors, GBP. GBP's down here. Okay, pounds. USD base pairs. Now, notice across here is all CHF pairs. I told you, you guys crack me up, man. I told you that unless I specify otherwise, the charts are 15 minutes. I'm telling you this is a 1 hour chart. Okay. It's easier to see the moves on the 1 hour and the cycles. All right, you guys are busting my chops, man. It's crazy. All right, look. Remember I told you that they use majors to move the board? You'll see USD CHF moving, and these pairs will still be sideways. This is the trigger to move GBP CHF and Euro CHF, right? So if you see CHF moving already, and you see Euro trading flat and GBP trading flat, the trade is here and here. You'll be able to see that. That's why they're matched this way. That's why they're paired up like that. Okay? I don't want to get too out of whack with this because we're going to talk about disparity tomorrow, holding the levels and moving the pairs. But that's what happens. Okay, yen, remember I told you yen is the trigger for this pair and this pair. How they handle the yen determines which way EJ and GJ will move. Craig, you asked me about my monitoring matrix. Here it is, 9 pairs. You can substitute any pair you want in here, but try to keep the fractional disparity in place. Okay, so if Euro's rising, GBP's rising, and yen is sideways in a chop like right here, that tells me there's opportunity in EJ and GJ. See? Jim Nicholson talks about some of this in the forum, and he mentioned it in the class. That he spent a lot of time watching the base and then observing the crosses. When you understand what they're doing and how they're working the board, it just opens your mind to so many things. Okay, I hope you guys understand the layout. That's what the 1 hour is for, to look at the fractional disparity. We'll talk about it more. To give you an idea where the cycles are. Let's say you take your 1 hour charts. Here, let me clean this off a little bit. I can't blow this up because it's a picture, but let's say you go, all right, peak formation high, I expect this, I expect this, I expect this, and this. You mark your chart, shrink it back down. You go through, all right, there's peak formation high, I expect this, this, and this, right? Now you have your charts marked up. Now you move them over, and you look at the disparity. All right, man, they're holding yen in a chop. GBP made the low, it's expected to rise. This is sideways, GJ will rise. There's the stop hunt, GJ will rise up, right? That's how you use them, to help you get an idea of what the moves are. The cool thing about fractional disparity is that it takes a couple of bars to move the cross when they flash the major. And that is like a work of art. It gives you a couple of bars to get into the trade ahead of everybody else, which helps you pick the low and the high more accurately. It's pretty cool stuff. And I don't know, Scott didn't answer him. If he's here, I'll call him. But Scott has spent the last year going nuts with high-low. He even made some indicators and stuff. You're lost. Don't worry about it, man. It's the third element of the system. The fourth element of the system. It's not important. I think there's a movie, right? The fifth element? All right, well, this is like the fifth or sixth element. Cool. Scott just said he'll do it tomorrow. We'll talk about fractional disparity right out of the gate. Scott, is 6 o'clock okay? Because I'm putting you on the spot. You tell me the time that works for you, buddy. Okay, so I'll do questions right from 6 to 6:15. Scott will talk about the disparity tomorrow. Perfect. It's set. Set match. Great. I'm excited. It's a date. Okay. All right, so look. You understand how to look at the disparity on the collection of 1-hour charts. We talked about market timing. What time of day is the best? Some of you guys asked, I live in London, should I trade the London session? What I was taught was, it's kind of weird. The guy was kind of rude to me, man. I was like, I don't know, I got a little offended. But it's the truth, man, and it might sound harsh. It's like, I did the same thing that all you asked. Do you have to get up during London, man? And it's like, when you're not making money, that's the first thing out of your mouth because you're like, shit, I got to get up in the middle of the night to make money. He told me, move to Hawaii, deal with it, or find another profession. That was the answer. So, guess what? I dealt with it. I now sleep during the day. I push a little button, my room gets dark, the blinds close. Right? Scott bought some blinders. You just deal with it, man. If you're making decent money, you do not care about what time you got to get up. I promise. It all takes care of itself. The ideal time to trade is London Open. Last quarter of the box going into the first couple hours of the session. Why? Because understanding the complete 24-hour cycle, that the accumulations during Asia, the first stop hunt comes out of the box, that you may or may not get the reversal going into the U.S., that's the most pristine setup. It's the best time to trade. The U.S. does offer good opportunities. Sometimes they'll hold the level, disparity, they'll hold the level all through London and then make the W or M formation in the start of the U.S. session. That does, in fact, happen. Zen's going to present that method to you guys tomorrow. The time of week, which days offer the best opportunity? It's the week backwards, if that makes any sense. It's Thursday going into Friday, right? It's Wednesday going into Thursday is the second best night. Tuesday going into Wednesday. Monday going into Tuesday. It's the week backwards is the best opportunity. Why? Okay, look, remember this? That's why. Because if the pattern presents intraday, right, then it also presents spread out over the course of the week. Remember? You have the false move week beginning. So Sunday, Monday is a trap move. Tuesday, Wednesday, Thursday, depending on where you are in the cycle, you'll get your anchor point for your trend. Then you get 1 day a rise, 2 days a rise, 3 days a rise, and Friday going to end the week, they'll trap you into make you pay swap going into the next cycle. All right, some people saying I'm losing audio. Am I still good? I'm good, right? Okay, yeah, all right. So if you think of the pattern intraday, dude, it's you. All right. If you think of the pattern intraday, the same structure spreads out over the course of the week. So if it spreads out over the course of the week, the last leg, Thursday going into Friday of the cycle, will yield the most possibility for you to get an aggressive move, a 33 trade perhaps, because they're going to be aggressive on the last leg of the last day. You'll make a 33 trade and make an aggressive correction. You can catch both of those trades. Okay, it's coming up, Dave. Hang on. All right, time of year. You hear all these different stories about forex. Oh, it slows down in the summer and everything. Well, we're in the middle of the summer where I'm at, and those moves are still there every single day. That's crap. The only time that I know for sure these guys go on vacation is about mid-December to mid-January. Now, I'm not saying that they don't take off in the summer and go on vacation, but the pairs still present. Okay? So what do I mean? You can trade comfortably all year till about December 15th. It's usually the Friday after the first full week in December. Or the first full week in December. Like, I think this year, like, Wednesday was the first and it went on. And then, like, the 11th or something was the first full week in December. That was the end. They were gone. They took off. They went to Aspen skiing. They went to Subio's house to get advice on trading. That kind of stuff. They paid Rick not to trade with their bonuses. Okay, so they come back. You'll see crappy moves. You'll see little continuation. A lot of people try to grab scalps during that time. It's just not necessary, man. Just take some time off. You've had all year. If you couldn't make it by December 15th, you need to take a month off, do some homework, look at some charts, give yourself a break, spend some time with your family. That's what it's about anyway. That's what all of this is about, our families. Okay, the first Friday or first Monday after the full week return in January after the New Year. So like January 1st, 2nd, that's the holiday. That might be a Monday, Tuesday. Then that Friday will be like the 6th or 7th. That following Monday they come back. They start coming back. The 8th, 9th, like that. So that's the only time that I am completely aware that there is nobody at the desk except an underling, and he is not authorized to make any aggressive moves or big moves without talking to those guys. Okay? News releases. Okay, the last bullet. I've been telling you all week the news is used to accomplish their goals. So, understanding that the news is crap, why do you want to trade crap in your life? You don't need it. Non-farm payroll, stand aside. But since nobody listens, I'm going to tell you how to trade non-farm payroll. Non-farm payroll should be traded, if you must, at 9:35 Eastern Time. 9:30, 9:35. Why? Because at 8:30 they'll make a spike to the low, pull back, and at the session changeover they will make the second leg or do something. So at 9:30 you might get a brink set up based on non-farm payroll being the trigger. You need to be flat 1 hour before the news comes out. Why? You might ask. Because it's in page 622 of the dealer's handbook when you signed your agreement, subparagraph I-A267 or something like that. It's really hidden in there. It simply states, the dealer doesn't have to take your shit contract order that you filled leading up to news. Here's what happens. You're in a yen. You want to get out. Dealer rejects the order. You get a little bar that says rejected. You click it again. Too close to news. Dealer rejects the order. You now have to sit through the news with your order on. That, my friends, is a 50-50 proposition. 5 slides back, I told you that's not the business we're in. Some dealers will get you out up to 30 minutes before. You don't need that kind of gamble in your life. If you want to trade the news, I did it a while back and posted it in the forum. I think it's in there just to show that it can be done. I don't want you to do it. I think EJ was rising like for 3 days, and he issued a spike to the high, and right at 9:30 I took it short, and it was good for 180 pips or something like that. The same things apply that I have taught you to the news. The best thing to do is to be out 1 hour before, and if you must take it, wait 1 hour after for the session changeover at 9:30 when the new operator, market maker, comes into position and starts his moves. If you see the pattern, take it. Tight stops need to be used. Okay? That's how you trade non-farm. I'd rather you not, but if you must, and you guys must, I know it already, I guarantee you half of the room will be up Friday trading non-farm. If you must, that's how you handle it. 9:30, 9:35, wait for the dealer to come on, shake things out, see what he shows you. If he throws you a W, take it. Throws you an M, take it. Good job, Max, sleeping in. FOMC is the middle of the day. You should not be trading it. But I will show you a chart where FOMC was used to complete the trigger. Okay? Thanks, Whitney. Glad you're staying aside. Stand on the side. Okay, so that's how you find your times, okay? Market timings I mentioned. We don't need to go over the market times again. They're on the tape, right? Understand how important the Brinks trade element is? Yes, Ray, there's more than enough pips at all other times in the day than to worry about one sucker's trade once a month on Friday. Make a short week of it, first week of every month. Be done by Thursday. Tonight, you're done. You think Rick's trade non-farm tomorrow after that letter he sent me? Of course not. Rick, if you're listening. Okay, look. Market time, we talked about it. I'm going to just briefly mention the blue box. One more time, how about going over the tape, buddy? I talked about the market times. All right, they're on the tape. If this wasn't taped, I'd go over. If we were in live class, I'd go over it for you. All right, here. Your blue box and your red box. You guys have been driving me crazy with this. Here it is. See, I told you I'd cover it. The blue box will paint at the start of each day, 5 or 6 p.m., depending on the dealer. A tracer, black tracer, gray tracer, whatever color you have, whatever your dealer has, straight down, it's a dotted line. It looks like this right on the side. You've seen it, that dotted line. That's the start, the daybreak. Okay? It should stop painting right before the London Open around 1 or 2 a.m. If it's 1 o'clock, it's okay. If it's 2 o'clock, it's okay. The reason why we stop it a little bit before the gap time and the changeover is to see them widening the swing for the breakout traders and to identify what's going on. The purpose of the box is to highlight, Craig, the Tokyo channel, give you an idea of what the range is and how the market maker has structured the spread for the trading session. It helps you to identify the 3 levels of stop hunt. You are smarter than a blue box. If the pattern comes a little bit early, it's your job to restructure the box and identify where you are in the cycle and take it. Okay? Cool. The red box will paint at the start of the USA session, really a little bit before, 8 to 11. It's there. Some people have a whole race, put it for someone where the red box goes a little bit longer till your trading hours from 8 to noon, 8 to 1. That's okay. It's whatever you like. But the purpose of the red box is to show you the range where the reversal comes in most often. And that is between 8 and 11. With the ideal time being, anybody? Shadow box, 9:45, right? The shadow box paints from 9 to 10. And if you want to shrink it down to highlight one candle, Ray's going to cover that with you on Sunday. The boxes will be discussed in detail on Sunday, okay? All right, it's 9:30. I just ate. I got to pee, man. All right, so 7-minute break. Let me get this. I know you guys drive me crazy. All right, about another half hour, 45 minutes, and I'm going to bring on the check downs and stuff. And the check down, the last thing we do tonight, should start tying all the loose ends for you. If you are struggling after the end of tonight, I want to know about it. Drop me an email. Okay, so we're talking about the box timings, good stuff. Okay, so look, the method. Let's try to make sense of all this. How to make sense of all this stuff I've been throwing at you for the last couple of days. How do we do that? Sunday, the answers to all the work time ribbons. Okay, look, when you start doing your checkdowns, I want you to work with the 1 hour first. When you become proficient in understanding the averages and stuff, it's not necessary to look at that chart. But let's just, for argument's sake, let's all start with the 1 hour. Okay, draw your bias lines, your anticipation of where they're going to go. Right? These are the questions you need to ask yourself to evaluate the trade properly. What level are you in? Am I in level 1? Is it level 2? Am I A2, V2? Where am I in the cycle? Do I see a peak formation on the chart? Is the midweek reversal possible? Is that the fake move week beginning? Anticipate where it's going. Man, I see the anchor point. I got WVVM ahead of me. I see the anchor point. I got M. They hit the stops high, second leg, spread out over 2 sessions, Sunday and Monday. I'm pretty sure I got AAW ahead of me. Right? A1 is straight away. I want to try to get the pullback on that. V1 straight away. I don't want to get the pullback on that. I want to trade trend. Market maker trend. Right? Is it reversal time? They made the anchor point. They've been dropping. It just so happens to be Wednesday. They hit the low in London and hit it again in US. I think I got my anchor point for the next cycle. Okay? That's the kind of stuff that I want you to ask yourself. You don't have to do technicals for day on end. You ask yourself, what happened the last 3 to 5 days? That's all. Because they're on a 3 to 5 day cycle. They can drop, hold, drop again. They can drop, hold for a day or two, drop, reverse. There's variations to every theme, right? You ask me, can they do an extended consolidation like they did in GBP-CHF? The answer is yes. They could drop, hold, work the crosses for 2 days, and then come back. They can drop, hold Thursday going into non-farm and not move. They can rise, hold, and not move going into non-farm payroll. Different triggers for different reasons. Okay? Work the crosses, hold the levels flat, USD, JPY, which forms the triggers for the yen crosses, hold. That's the kind of stuff I'm talking about. That's what you have to be asking yourself. Am I at V1 or A1? Is the straightaway trade possible? Is it coming out? How to identify and look for that cycle, that trade? There's always a telltale sign for the straightaway to be picked up. It's pins to the 50 or a pullback. You'll see it. We'll talk about it. You just need to form a bias. That's it. 1 hour, 15 minute. Don't drive yourself crazy with all the other time frames. All that stuff is for old retail traders. If you're swing trading, you can look at the bigger time pictures. I think David and Bruce will talk about that coming up again. For our purposes here, the 1 hour chart is sufficient. All right? What color is yesterday's daily candle? Is it an up or down day? Red or green? Why? Why do you care, Steve? The pivot points are based on this, and the pivot points help project where the high and low will come in. So if you know the color that the candle closes at, and if you are in the down cycle, let's say it closes red and you're in a down cycle, then M3 or M4 will be the high of the day, and M1 or M2 will be the low of the day. I will discuss this more tomorrow. Okay, this pivot grid gives you an idea when coupled with other things of where the high might form. What do I mean? If it's an M1, M3 day, and I expect the high to be at M3, if the M3 lays on the ADR high in the light blue tracer, and if there happens to be like a blueberry line or a piece of mayonnaise laying across all that area, that's your strike zone tonight. Price is going to break out, run to the strike zone, find resistance, form an M, and the bottom will fall out. That's how it works. That's why those things help you. We're taking regular technicals and using them in a different way to help identify the stop hunts and the reversals. Okay? Good question. If the cycle starts on a Thursday or Friday, will it go into a new day, new week? Yes. If they hit the high on Friday, pull back, They might repeat the level Sunday night and drop. That's an early setup. You'll grab that. Okay, perfect example is the chart I put up. Let's see. Where is it hiding? The chart I put up the other day. Let's see. Of course, I can't find it under pressure. I'll look for it later. I'll put it up in a little bit, all right? Okay, so the next couple of questions you want to ask yourself, just get an overall general idea of where it's going. I know I said 3 days, 2.5 days, I understand that, but if it had a monster move in one day, if it moved like 600 pips or 500 pips in one day, you got to outsmart these guys. That's a typical weekly move. So if it's that big of a move, you have to understand that they're probably going to reverse. Okay? Try to analyze the real trend versus the market maker trend. Peak formation low, peak formation high. Your PFs, okay? Peak formations. The peak formation comes in as the lowest point on the chart or the highest point on the chart for the cycle. It's the anchor point for the market maker trend. Okay, what level am I at? Am I at V1, V2? Is the anchor point? M, is it reversal? New cycle started, reset? These are the things you have to ask yourself about the pair you're looking at. Don't overcomplicate it. It's really simple. Last 3 to 5 days, what's the cycle? I see a W anchor point. I expect rise 2 more days. That's it. That's technical analysis right there in a nutshell. Okay? Your job is to react to what the market maker does, what he shows you. Have a solid bias for the chart with the squigglies, little lines on there of where it should go. But I want you to project and anticipate his next move. I'll show you what I mean. I want you to be able to trade both directions without fear. Okay? Trend is better, but being able to go both ways sets you aside from a regular retail trader. He trades both ways. Why do you have to sit aside when it retraces? Why can't you take it both ways all day, every day? That's what he does. He's doing it. When the signals appear and they're clear to you, take it. The new guys, I want you to be a little more conservative and take the direction of the market maker trend. Those trades will yield more pips a lot easier. Okay? All right. Now, project and anticipate. I saw the peak formation low. I expected him to hit the stops low, second leg, take it. He holds the level 30 to 90 minutes, forms out a W. I'm mad I got a bad fill on that, but that's where I got in. I expect this trade. It's safe. I expect it. This is what I'm expecting. Hit the stops, drop, rise. He already made the peak low after a couple of days drop. If you notice how far away the 4 hour, look, just the fifth, by the way, I know you're going to ask me, 15-minute chart. Let me grab my little ballpoint over here. I love this thing. Nah, I grabbed the wrong one. Highlighter. That's no good. All right. 4 hours here. Right? Trading below the 4 hour. 1 hour. Mayonnaise is the 1 hour. Trading below that. 50 EMA on the 15-minute chart. Trading below that. Now, this is a technical downtrend, right? It's a technical downtrend. Every textbook says 4 hours down, 1 hour's down, 15 minutes down. How do I know that, Steve? You only looked at one chart. Because I know price in relation to the position of these averages. These averages represent the next higher time frame on the cycle. I don't have to look at the other high time frame charts if I know price is oscillating below all of them. I know that I'm in a downtrend on all higher time compressions. Simple stuff, right? Now, it's been dropping for 3 days. This is level 3 in the cycle, ending the day. You got an aggressive spike and a pullback into consolidation. Right? Market maker gives me V3 to the low, right out of the box, in line with the peak. TDI is rising. TDI also gives me a big fat W crossover. Gold. I expected this. The low of the day holds for 30 to 90 minutes. He hits it, comes back, hits it again. If I got in here and I'm still good, I restart my clock. Price rises, I'm out in the blink of an eye. 50 pips. Go to bed. Good day. Right? PFL, peak formation low. That's the level 3. This trade has come into level 3, peak formation low, trap the last batch of suckers, make them chase it down, snatch the market away quickly, get the hell out of there. Right? That's his job. I even think they say that to each other. Man, it drops in. We got everybody trapped. Get the hell out of there. I think that's what they say. I think that's one of their terms. Okay? Into consolidation into the next day. We expected this. A 21 pip box. 21 pip Tokyo channel. Just for Craig for his birthday. When it's tight like that, it's going to be beautiful. Market maker spikes the low in 3 moves. 1, 2, 3 for a pin. He pulls back quickly, hits it again. That's your anchor. W for the day, beautiful. Get in wherever you can. You're out in no time. Boom. First target, water. Second target, mayonnaise. Or hold for the full run and start to look for this. Boom, boom. This looks like it's going to be the M formation, right? He spiked high. Notice how he spiked past yesterday's high and pulled back. Okay? Beautiful stuff, man. Okay, next one. I want you to project and anticipate. Project and anticipate. This trade was, gosh, I don't even remember. A couple weeks ago, a few months ago, doesn't matter. Isn't this the same exact thing that happened Sunday, Monday? I did only take 50. I'm telling you, take what you want out of there. Look, project and anticipate. Market maker spikes the low yesterday. He pulls away, hits the stops in both directions, does his business. He comes right back to yesterday's low, right there, and he just misses it. Look at that. What's my anticipation? Boom. I know where it's going. You should draw the lines on your charts. Project and anticipate. Okay? Next one, same thing. Here's my peak formation low anchor point. What do I expect? Project and anticipate. This is what I expect. He delivers. He does not disappoint when you know what he's going to do. Okay? Stop hunt low, 3 vector candles below the low. He gives it to me exactly like I asked for it. There's a spike right there. That's 1, 2, 3 to the low. Boom. Beautiful. When he does 3 to the low like that, it's almost like a certainty that's going to work. He pulls back. Railroad tracks. He pulls out of there quickly and takes back the 2 previous bars in 1 candle. Game over. You own him. Okay? Project and anticipate the market maker's next move. Try to read what he's going to do. Surely you guys see this, right? This is actual. Took everything off the chart for you to see. Clean. Consolidation. Boom. Boom. He goes a little lower here. Not afraid. Doesn't that just look like EuroCAD from the other day? This is an older chart. These are older slides. Look, project and anticipate. I project his next move. Boom. Project and anticipate. I was off a little. Understand that this is the possibilities of what's going to happen. He's going to make the high and come back into consolidation. End the day. He ended the day up on this one, closer to the high. That would be a, Jim, if you're listening, that'd be like a 23% retracement back off the high, right? Not a 618. Okay, I'm kidding, man. I hate that shit. All right. Project and anticipate his next move, always. Okay? Look. This is what I expected from him. You can look, you can even go one step further. I think I sent this to Lou. Project out the moving averages because you know how they work. Right? Project the averages out. We got the trade. We know what level we're at. We got peak formation low. Here's your anchor coming in. A 3-time anchor. That's beautiful. What do I expect? I expect them to rise, bounce off here, go into consolidation. Next night, a W or a V and a rise. He does not disappoint. That's what he does. He knew I was watching. Okay? project and anticipate. This was my granny trade. I had a laugh because if you see my open order right here, see the green line? I caught it to the tick right there. I caught it to the tick on the high. Why? Because those idiots gave me a third pass and I exploited it. You don't want to give me a third chance at getting in. Tight stop, project and anticipate. This went in, and it actually didn't produce till Sunday. As soon as they opened, they completed the pattern. I don't want you to hold trades over the weekend. I don't listen to my own rules, or I'm terrible. When you become more proficient, you will be able to project these out and hold. I don't want you to do that right now. I want you to make money during the course of the week. Don't let these guys gap you. You have to be certain you caught the high formation or the right point of the move before you start doing stuff like that. This trade closed down. It cost me nothing to stop at break even and take it into the weekend. All right, I was already up. I just missed my take profit by a few pips. They pissed me off. I wanted to make sure I got it. I'm not telling you to do this, but I wanted you to see. I joke around. I told Heidi, I showed her this trade, and I said, this is why I'm the teacher, biatch. I'm kidding, man. Anyway. That's a granny trade, we call it, where you grab the tick for the day. That was the high of the day. I grabbed it on the high of the day to the penny. Crazy stuff. Love it. Love it, love it, love it, love it. Okay. So now you're looking at your 15-minute. How are you going to get in the trade? We've done the 1-hour check. We project and anticipate what the dealer's next move is, right? So we approach the screen. We know at the open. We know, okay, we got WVVM, we expect certain things to happen. We scan for the proper channels. The channels are blown out. If we can't find a consolidation zone at the last 1/3 to 1/4 of the box, that's a pass today, no trade. We look for the breakout. Okay, Craig's guys, false move. The breakout's the false move. We look for that in 3 vector candles. On top of each other's prettier, but if not, don't worry. We wait for the high or the low to settle in and go back into consolidation. We project the possible second leg and anticipate where it will come in. Slightly below the first leg, right? Slightly above the first leg if it's a W. We anticipate how he's going to handle it. We ask ourselves, has the market maker worked this for about a half hour or so? Has he been staying there? If the answer is no, you can expect him to extend it again. What's present? Do I see my railroad tracks, my evening star? Do I have something that Steve mentioned in that little pattern segment that I could sink my teeth into? Outside bar to the high, outside bar to the low, trading below, inside bar, inside structure, trading below the high. Right? Did he come back for more, that greedy sucker? Did he make the second pass? Did he retest it? High retest, low retest. Did he come back? If you have all those criteria, you take your entry at market. Stop loss right above the high, take profit 50 or wherever you want to start learning to trade it to. I want you to at least master 50 in the beginning, okay? Somebody's playing music. Is that me, or do you guys hear that? I feel like I'm at a concert. All right, somebody's mic is open, coughing, sneezing. Let me check this. Hold on, man. I'm sorry. All right, the guilty party is... Nope, everyone's muted back. All right. Okay, so look. Are you using training wheels? That stuff hasn't been released yet because I'm not sure how it's going to work with the new FIFO rules here in the U.S. I was developing something and these jerks changed the rules on me and now I can't release it. When I get it figured out how it's going to work properly with the new platforms, and if it works out, I'll hold a special breakout session just to issue the training wheels and show you how to use them, okay? Don't forget, once you get in the trade, set your trailing stop by 32 pips and let it ride. You should have got the right entry for the day. If you're looking at it and they come back and test the high or low, now you got to make a decision. How did market makers extend the high or extend the low at this point in time? Did they tap it? Did they close it aggressively? What's my next move? Market makers extend the high in 10 or 15 more pips. Stop yourself out. I'm going to write it down. It's not on the slide. If market makers extend the high or low in 10 or 15 pips, you're going to get stopped out because your stop's 23 pips. Wait for that candle to close. If it closes up 10 or 15 more pips, if you're going short and it closes green 10 or 15 pips above, stop yourself out because he's going to hit you. Save yourself the 7 or 10 pips. It's easier to make it back. Okay? Simple. That's it. Fred, good job. Just made 50 pips on GBP Australian level 3 pattern. Nice. Picked up 31.50. Profit at the 50 EMA. Very nice, Fred. Horace, what did I say? It's on the tape. If market makers, 10 o'clock, mark the tape. If market makers close above the previous high in a green candle and they do it in a 10 or 15 pip move, stop yourself out. Save yourself the pips. You're going to get triggered. Why do you have to wait for the market to prove you wrong? That's an old adage out of textbooks. If they extend the high, wait for it to settle back in and go again. You saved yourself 5, 7, 10 pips. It's not a big deal in a mini account, but if you're ever going to trade 10 standards, it's a lot of money that you preserved to take it again. Okay? All right, good stuff. Okay, I have a break slide coming up, and we don't need a break. I think this is actually a good time to bring Carr, Kim, and Granny in. And Zen took care of adding them to the microphone list. If you guys are available, I'd like you to check your mics. And Carr, can you speak first? Are you there, buddy? Get these guys in here. What these guys are going to do is they're going to go through the checkdowns. It's a good place for us to stop for our lessons for tonight. What they're going to do is they're going to go through the trades that were executed today, the possible biases and directional stuff, and they're going to do it on the current charts. This should give you an idea of helping you to identify the market cycles a little further and helping you to see tying all this stuff that we've talked about for the last couple of days together. Okay? Michael, I don't know what you're asking about the rules. Nothing's published. Everything's here on the tapes. Okay, do you guys have the mic? Somebody? Okay.
Yes, sir, we do.
Cam, you here? Granny, you here? All right, listen. I give you my 3 top students, in addition to Rick and Abo. There's a lot of them, but I give you my 3 top students right now. Carr, Kim, and Granny. And I'm going to let them take control of the screen. And Carr, who's taking the screen?
Yeah, I got it.
Okay, take it from me and listen to these guys. They're going to help tie everything together. There is no homework tonight. I'm going to ask Carr to end the session when he is done, whatever time it is, 11:15. I will not be back tonight. These guys will carry it through and wrap it up tonight. Thank you guys. Good night. And I'll see you tomorrow for the last day. Carr, go ahead. You're on.
All right, thank you.
Steve.
Thank you, Steve. All right, guys, before I show my screen, just want to give a just want to thank Steve for letting us show you guys what we normally do. The reason we're presenting is something called the daily market review, and what we normally do from Monday to Thursday is actually show you, show everybody, whoever is in the daily market review, you know, where the entries would be, where we would have gotten in, what we're looking at on the hard rate edge. Okay, it's easy to see chart. Well, I wouldn't say easy to see chart, but it's kind of easy to see charts, you know, in hindsight. You'd be like, oh yeah, I see this, I see that. But how do you actually project, like Steve is talking about, projecting what you're going to see the next day and how it actually plays out? Okay, so I'm going to, you know, I'm going to let Granny and Kim speak for a little bit, and they can introduce themselves, and we'll take it from there. Go ahead, guys.
Good evening, everyone. This is Kim.
And this is Granny.
And Granny's there, too. Yeah, hi. We do the Daily Market Review Monday through Thursday at 8:45 p.m. Eastern Time for 45 minutes. And like Carr said, we go over all the trade setups for the day on our 6 core pairs, which are Euro Dollar, Euro Yen, Euro Swiss, pound dollar, pound yen, pound Swiss. And then we also take a look at 4 others, the Aussie, the dollar yen, the dollar Swiss, and the CAD. And really, Carr is the specialist for identifying and speaking to the London trades. And Granny and I focus on and specialize for the New York session. And so you get coverage for both market times. We don't do Asia, but because none of us actually trade Asia. But it's a great way to actually review how the day went, review what trades you might have taken or missed, and kind of help hone your eyes in on what what trades you should have been in or could have taken and how you maybe could have done better. So Granny, is there anything you want to add to that?
Well, only that we pretty much point out the same thing every day. And it might sound like that would be monotonous after a while, but that's how people are learning, because we do point out the same thing every day. They're beginning to see, oh, yeah, there's 2 pins to the mayonnaise, for example. I remember that's where they would take that trade. In other words, it's just lessening your learning curve by months and months and months. Because we've done the homework for, I can't tell you how long. Kim and I both started this back in December, so we've been at it for, well, 8 months now. And what you've learned from Steve tonight, you have to go back and really, really understand the basics. Now, a lot of the things that we do are a little bit more advanced, and at first it's going to seem really strange to you, but after you master the basics that Steve has talked about the last 3 nights, it will become much, much easier for you to see when you sit down at the charts, and your eyes will begin to say, oh, there's a head and shoulders, there's a stop hunt high, I'm ready to go short, and those kinds of things. So it's just going to lessen your learning curve, and I think it's a really good value for you.
Yes. Yeah, so pretty much what we thank you, Annette. So pretty much what we normally do is everything you learned, we review it. It's like continued education, okay? So you learn this material, you absorb it, you look at the charts, and then you're like, you know what? I don't know. Am I seeing it right? Am I not seeing it right? What's going on? And then what we do is reinforce everything you know and everything you learned over the last several weeks of looking at charts and this 1 week of attending the class. And then all of a sudden you're going to be like, oh my God, instead of me sitting and looking at this stuff for 6 months trying to figure out what's going on, we are sort of like giving you a roadmap of how and what the next hand is going to be. So let's say if you're playing poker, right? Wouldn't it be nice to know what the next hand is going to be so you know how to play it, or whether you should play it or whether you should fold it, right? Whether they're playing your game or they're not. Not that I play poker, I don't even know. Anyway, a couple of good questions. The session starts at 8:45 p.m. Eastern. It's from Monday to Thursday. Granny, Kim, and myself, we kind of run the show. The information at the present time is not recorded, and the reason for that is because, as you guys know, our forum has been hacked and there are people recording stuff and all over the web and stuff like that. So what we try to do is keep this as pure within the family. At the present time, it is not recorded. If Steve do get a secured, server or something like that, then we'll discuss it at that time. Okay. Please go to the forum. Okay, please go to the forum. Under announcements, you will see, it'll say daily market review sessions. It'll say, and then you can go in there, click into it, and it's going to tell you what you're going to learn. So what I'm actually going to do is very quickly go over what the daily market review, you're going to learn from it, and what the expectations are and things like that. Okay. So what I'm going to do is I'm going to show you. It's a Word document anyway. I'm going to show my screen now, and anyway, so this is what pretty much you're going to do is again, Monday to Thursday, 8:45 p.m. to around 9:30. It's approximately 45 minutes plus or minus. Once a week after these sessions are over, what I do is I go and I touch on every single topic that Steve taught us. It's like almost refresher. Okay, so once a week, whenever I present, so let's say I present on Monday, I'll do it on Monday, but if I present twice that week, I'll only do it that one time. Okay, so let's say 1 week will be on pattern, next week will be on levels, next week will be on TDI, the following week will be on homework. The homework is the last piece because the homework is going to take all the other 3 segments and put it together for you. All right, and also starting next month, I'm going to have Dave Jiang come into the daily market review sessions and talk about swing trades. So you're going to have I trade London predominantly, and then you're going to have Kim and Granny, the US, and then Dave is going to talk about how to do swing trades. So you're going to get the best of all the worlds, man. Okay, so what you're going to expect to learn, you're going to look at how to look at the chart on the hard right edge, how to do homework effectively, how to do your check downs. We talk about that. As a matter of fact, 2 weeks ago or maybe a week ago, Kim did her check downs and what she did. Okay, you got to know what your bias is and what you look for. Okay, what your entries and exits are going to look like, especially your entries, right? What is your best stop loss? Where you're going to look for your stop hunts. Remember Steve said you're going to hit the stop before they move. What does a confirmed M and W pattern look like? We talk about M's and W's, but which M and W fail and which one actually don't fail? The ones that don't fail 90-95% of the time, we just call them confirmed M's and W's. There's a certain way they look. Okay, candlestick patterns and which one matter and which one doesn't matter, and where certain things happen that matter, like Empire State, or like Steve was talking about the morning star, evening star. Where does it really matter and where doesn't it matter? And levels and how to trade in line with them. Okay, so if you go to the forum under announcements and it says daily market review sessions with Kim and Granny, it'll show up right there, and then you can just go in and get yourself registered. Okay, so I'm actually going to do the check downs. It's actually today is my day actually to do the check downs, so I'm actually going to go ahead and do it. There are certain individuals that are part of the daily market review session. So for those people who are and have seen this earlier, then you guys can just go and get some sleep and go trade. Now, yes, the Visa card can be done through PayPal. If you have any questions, you can send me an email. Email is fractal, FRACTAL, pips@gmail.com. Okay, if you go to the announcements and look at the daily market review sessions, you're going to actually see my information over there. Okay, so this is pretty much what we do. Hard right edge, we say what's going to happen tomorrow. Okay, what's going to happen tomorrow. So this is what the zigzag we drew based on what we saw. So we were like, all right, man, tomorrow's going to hit the stop high and drop. I just draw this and it, boom, it hits it, and we take these trades. Okay, now Steve mentioned that some of the trades that we take and how we take them. Just before I even begin, I just want to show you this trade that Terry took. He's out in Australia. Okay, you see, this is his entry, man. He saw the 3 swipes to the high. He took the entry. The entry is tight. It's like a 13-pip stop right off the high. He anticipated the move. He saw the move, and we normally try to do the old Ray trick, which is 5 seconds before the candle closes, you go into the trade, and the minute it closes, there's you see the little diamond over there. That thing fired, and boom, he's off to the races. Momentum shift to the downside. 1 candle, he's done. 50 pips, and then this is the more advanced stuff Steve was talking about. This is push 1, hit the stop, drop. Push 2, hit the stop, drop. And over here, you see a second entry, and he hit his target, another 50 pips. He grabbed 100 pips in the same move, man. This is the more advanced stuff that you're going to see. How it comes up and hit the stop. These are the stuff that we talk about. How to trade. Yes, you're not supposed to trade within the pushes, but again, I told you it's a little bit more advanced. These are the kind of things we kind of talk about. We talk about it so much that after a while you're like, man, I know exactly what the hell these guys are talking about. All right, there's a certain movement, the certain pullback. We measure these pullbacks, how much they're supposed to pull back, things like that. All right. Yeah, normally we just set our targets for 50 pips and just walk away, man. Otherwise, we can start messing around with it, right? Okay. All right. Yeah. So normally normally I trade, when I come into trade, I come in right at the edge of that box around 130, and then I look for my trades. Okay. So good job there, buddy. All right. So anyway, let's talk about what happened, and then we'll just kind of go back and show you, what our projections were and what we thought going to happen and how it actually played out. Okay. All right. So here we go. I'm going to start first, and then I obviously ask. We're just going to go through like a couple of pairs, 4 to 6 pairs. That was Steve told me to just kind of like keep it, just to show you guys what we actually do. Okay. As you can see, shoulder, head. Right now, when this shoulder and this head formed, this hasn't happened yet. This completes the shoulder head shoulder pattern, right? Hasn't happened yet. So when you're looking at this pair, you're like, it seems to be like a cord of wood, something going on here. You see, there's a railroad track, right? Now, staring at the charts for months and almost a year and more, I know they come down here and they do this stuff. Why? Because that's what they do. They'll come down, they'll induce short, and they'll go long. And that's why I took this trade, and I'm going to show you, like Steve was saying, we try to catch these crazy trades. Okay? Here's my exit, 50 pips, and here's my entry. I anticipated the railroad track because I saw these pins to the bottom. Okay, I started seeing the pins to the bottom, and I'm like, you know what? It closed right at the low, and it started turning green, and I was in right there, and it gave me my 50 pips. Okay, and then all day yesterday doing presentation and everything, I went to sleep right after that, man. I went to bed. I missed all these moves, and of course, when I woke up, I was ready to jump out of the window. Except I live on the first floor, so I'll only twist my ankle. Did you guys take any trades in this pair? Sorry, let me just blow it up. Kim, Granny?
I did not. I took the Euro Swiss.
Okay. All right. So beautiful. So this is what we talk about. See, it comes up, push, push. You see the railroad track? These are the things we talk about and how to do it. So let me just finish this, and then I'll show you how we actually do the projection. So what is my prediction for tomorrow? Okay. Now, staring at a larger picture. Okay. Whoops. I have 2 screens, by the way. Sorry. Staring at a larger picture on pound dollar, you can see that it kind of like did 1, 2, 3 drops, consolidate, came back up, did the head and shoulder pattern, drop. I'm anticipating hit the stop high, drop. Now, this is what I'm anticipating it to do. Okay, now, doing homework, you'll realize that Euro dollar and dollar Swiss are the only 2 pairs that does something called an extended stop hunt very often. Okay, they'll do extended stop hunts very often. So what does that mean? Well, it means one of 2 things, and Steve said it very clearly. If the market, when I wake up tomorrow morning and I see the stop hunt low, and I start seeing pins to the low, I'm going to expect a rise, because this is considered an extended stop hunt. But I would obviously my bias is this one. It's going to come hit the stop high and drop. That's what I would like it to do. Okay. So that's why we look at the 1 hour, know what level we are in, and which direction we should be trading. And so my anticipation is there's already 69 pips, hit the stop high, drop. Now, tomorrow is non-farm, so if this moves, this is from staring at charts. If we have a big move the day before non-farm, usually right before, the London session is usually pretty flat. They'll go back and forth and they'll swing within the range. They'll come up here, they'll hit, they'll come back down. They'll go back up here, they'll hit, they'll come back down. They'll just hit the stops high, hit the stop low, and they'll chop back and forth until non-farm. Then they're gonna hit the stop, and then they're gonna hopefully they'll drop. That'll be it'll be a better trade that way. Okay, so anything to add, guys?
No. Someone was asking you why level 2 is bigger than level 1.
Why is level 2 bigger than level 1?
Bigger than level 1.
That's how the charts look, man.
That's right.
I mean, that's just where it went. It came up and it took these guys out, right? It went right above level 1. It came right up there, and then it just did an extended stop hunt. I mean, that's just the way it is.
Well, Gloria sees 3 giant levels down with a reversal on Friday.
Huh?
So, I was just reading that Gloria wrote in there.
Yeah, I see what she wrote, but I don't know. This is how I see it, man. Again, it's an art form. That's how I see it. You guys can see it another way, but the way I see it is drop, consolidate, and they're like, you know what? Let's hit the stops above the 1. Remember level 2? Absent of market makers, so they sometimes pull this very deep. Sometimes they don't. Sometimes they do. Right? Why is this level this huge? I have no idea, dude. It went from here to here. My concern is when it ticks out that high is when I go to the next level. Okay? So my concern is once it ticks out the low, it goes to the next level. When it pulls how high it goes up here, as long as it doesn't take out level 3, I'm still good. Okay, I'm still expecting shorts. I'm still looking for shorts. Every reason to short, like Ray would say. I come up here and I'm looking for shorts as long as it doesn't take out 3. Once it takes out 3, that's a totally different story. Then that's my reset. That's my 1, and then I'm going the other direction. All right. How it hits the stops. You see how it came up here, it hit the stop high. If it's going to go long, it's going to have to hit the stop low, and then it's going to ride. Then I know, okay, man, it's going to hit the stop low is right. That's my level 1. Here's my peak formation reset. I'm looking for longs now. You know what I'm saying? So it's not a set rule. It's more about how you see what you're seeing at the hard right edge and say, this is what I think it's going to do. All right?
And sometimes if you look more than 3 to 5 days, you can confuse yourself. Remember, Steve says you just look back 3 to 5 days for the most recent peak, high or low, and then count from there.
Right. Exactly. Okay, so that's just this pair, and that's what we normally do. All right, and then after that, I'm going to go to EJ. Now, EJ, you see this peak, and then it started going sideways, and then it started dropping, right? Drop. Level 2 came right back up here. It started dropping. Level 3, right? Big fat W pattern. Now started going back up. Now remember, Steve said, man, they have a certain, if the run is overextended, my ADR right here is 154, right? Let's say 150. Okay, if this is overextended, it's like 500 pips. That's the quota for a week from the move from here, right? It's way past 3 days quota. 3 days quota is 450. This is 500 pips. That's 3 levels in one move. Now it looks like it's going to drop. All right, so when it goes below, I'm going to see what it's going to do. Okay, ideally, I would like it to hit the stop low and rise because I see my peak formation right here low. Okay, it's been collecting contracts, but because of these news, they've already messed up, and Steve probably mentioned that the news is going to mess up our technicals. And it's gonna do things that we normally don't expect it to do. Normally they'll go like this. You see how it drops, and then it collects contract, it hit the stop, then it drops to the next level. I know sometimes I'm moving the screen so fast, but notice these are the things we're gonna talk about. We're gonna be like, all right, man, here's a big fat W. Next time expecting hit the stop low rise. Now you wake up in the morning and you're up over here. you're not going to go long. You're going to be like, wait a minute, there's something wrong. I'm expecting stop and low rise, but it's not doing that. It's all the way up here. It's 500 pips up from the beginning of the move, and then all of a sudden you flip to the half-hour chart. You're like, you know what? Let me see what's going on. Bam! Isn't that a classic M? The spin right above the high. You're looking for shorts. Your entry's right there. Your stop was right above the pin. 30 pips, and it's lights out, man. It's like 300 pips, right? 250 pips. All red candles. A little diamond fired. Momentum shifts to the downside. All red candles. No reason to get out until the blue, until the first green candle. You see it? It's right here. It's an M pattern. Okay? You can see 1, 2, 3 to the high, taps it, comes up, and it taps it. It doesn't close above the third one. You see? It does not close above the third one. Okay? So, ideally, my bias is hit the stop low rise. Okay? That's what I would like to see. Here's my 3, here's my 1, and then this is all blown out. So, you know, it's a little bit tough to see what they're going to really do. So, I'm looking to do one of two things. If it comes up and starts showing pins above the high, hit the stop high when it comes out of London, I'm going to short it. Because this did the extended rise all the way up here. As you can see, it's like 500 pips. It just took out all the stops above here. Okay, it came up, hit all the stops above here, started dropping. So it could, if it comes and hits the stop high, I'm going to go short. But if it comes down and start hitting the stop low, I'm going to go long on it. Because here's my peak, my last peak formation low is right down here. And I only went one level, and then here's 2 and 3 together. So it kind of messed it up a little. Or it could just chop. Remember, tomorrow is non-farm, so it could just kind of go sideways for a little while until they make a decision on what they want to do. But the better trade, I would like it to do this. Okay. Sorry. Okay, I'm moving my chart too fast. Do you look at the range?
A lot of people are asking about the level counts, etc. And really, tonight we're just giving you, Car's giving you an overview of really how we do the DMR, and we go into, like Car said, in depth on some of these concepts when we're actually in the DMR. So tonight we're probably not going to go into as much depth as you are asking for. It's really to give you kind of what his expectation is for tomorrow, and really how he looks at the market.
Exactly. So the way I look at the market is very slightly different, because you got to remember, I'll show you how I trained, man. When I first started trading, I was looking for these M's and W's like this. And tell me, how often do you see M's and W's like right here? Okay, here it happened, right? Nothing there, nothing there, nothing there. Okay, you could say yes and no, but you know, your M's is kind of like right over here, right? This is too late. So what are you gonna do? So when I first started trading, I came out and I'm like, you know what? I got to see what is most common, which direction is actually going to trade. And that's how I learned how to trade these pin bars, stop hunts. That's what Steve called them. Okay? That's why I can catch these pin bars and I can grab them right off the high, is because I've done it so often. Like that, I'll grab that and then I'll grab that again. And I'll grab that again, you know, going long in direction with my trend. So this is what we normally talk about. If I see a head and shoulder pattern and we confirmed it, how do we confirm it? It takes out the neckline. The next day we're going to be like, Granny's going to be like, man, we're looking for stop and low rise. You see beautiful 1, 2, 3 swipes to the low. Pin bar, you're in. Your stop is literally the pin, 11 pips. And it's over. This is the shift bar and it's done. Next day, what am I looking for? Stop and low rise. I take that long. They come back and challenge it again. I'll take it long. That's my second leg. My stop goes below the low, and I'm good. Okay, if you measure from the second leg going long, it's just about 50 pips. It's 52 pips. And the next day, now I'm expecting stop and low right here. It does stop and high. I'll short it. That's my big fat M. But my better trade, because I'm in level 2, is long. So I'm going to wait for this W pattern right here. 1, 2, 3. This is something called a confirmed W. We'll talk more about that in in the market review, and then that's the move. Notice how the bursts happen. You see, every time it shifts the zone, it bursts, and then it goes into consolidation. When it shifts the zone, there's a burst. It goes into consolidation. Right? Have you noticed? When it moves, it bursts. It goes into consolidation. Right? This is chop. This is all chop collecting contract. This is shifting the trading zone. It's nothing more than shift the zone down, collect contract. Shift the zone up, collect contract. And when they're ready to move, it bursts. They go in bursts. They'll go boom, and then they'll go sideways. And then it'll go drop again. You see that? Here's your drop. And then it'll go into sideways chop. So understanding what they're going to do, this is what we talk about. Stop and high drop. Boom. Okay, that's your trade. Next day, we're still in level 2. We're still looking for short. Oh, it formed a nice M pattern. I took that trade right off the high. Short. Okay. So anyway, Euro Swiss. You said you took Euro Swiss, right, Granny?
Yes, I had one trade on the Euro Swiss, and I want to point it out because it was a loser. And a lot of times people will say, you know, well, there's so many that you point out that are winners. Sometimes it's helpful to see a loser. And I took this on my platform. This hit the 13. Oh, I'm pointing on it. I'm sorry. It's like Makogo. You'll have to find it for me, Car.
Which one?
It's the little,
Right here.
right there. Yes, that one on my platform hit the 13, and I entered right there and had my stop loss 3 pips above the water. And the next candle went right up, and within 1 pip took me out, and then proceeded on the way that I was, you know, I had planned for it to go. But I just wanted to point that in days like today, where this candle here was 93 pips long, the red one that Car's pointing to right there is 93 pips long. That's pretty wild moves for today and for this pair. So I probably had my stop loss just too tight, but that's one of the things we will be teaching you is when you get in, you can control those stop losses to 23 or less, and Kim is really good about getting like 13. But in that particular case, I had the stop loss just a little bit too close, and so I lost on that trade. So that's all.
Okay. Yeah, see, I mean, you know, again, this is just to show that, hey, you know what, we do take trades that not all winners, okay? There'll be time that we point out, hey man, we took this trade, this is what we were looking at, and it still didn't work out. You know what, their stops are a little too tight. Okay, she put the stop right above there. Nobody knows this candle is like 90 pip. That's crazy. 90 pip candle. You know, everybody's like, okay, man, it just shifted the zone. It looked like it's going to drop. It kind of like came back, hit the stop, and then it's going to drop. And then it just threw a monster candle, and then it still dropped. So she got the directional bias right, but nobody's going to expect a 90 pip candle. That's just crazy. Okay, so this pair, okay, this is 1, 2, 3. This big fat W Steve was talking about, okay, came back up to a monster M. Okay, now, if you look at the 1 hour chart, okay, this is Euro Swiss. I didn't kind of bring the box. This is a big fat W, okay, with a kind of like an extended stop on down over here. So here's the big fat M. Now, it all going to depend on what these guys are going to do right over here. Okay, the reason for that, remember I said Euro and Swiss, and this happens to be Euro Swiss. They do extended stop hunts. They'll come right down here and they'll do this kind of stuff. What I really wanted to do, because the big fat M, make this a reset, I would like it to hit the stop high. That's the better trade, right? Hit the stop high and drop. That's the better trade. Okay, that's why I have both the markings here. Ideally, I would want it to hit the stop high and drop. But you see the first leg formed. If this thing comes here and it throws the second leg here, then I'm expecting this to rise, because this could be your extended stop on. That's the point. Okay, ideally they've been collecting contracts up here and dropping it, so I would prefer it to drop some more. Okay, so how they're going to handle tomorrow, very likely just going to chop until non-farm, then they're going to hit the stop and they're going to drop. Ideally that's what they'll normally do. But remember, this is only one leg. You never see a reversal on one leg. It's always double legs. So from somewhere here, it's going to come back down, and then we're going to make a decision. It's 102 pips. So your better trade is if it bounces off the 50, take that short. There's 100 pips coming down this way. Okay, when it rolls over, you can take that short. Okay, then it'll form the second leg, and then you make a decision what it wants to do. All right. Okay, pound dollar. Pound dollar. Okay, so we were at extended stop hunt level 3 pattern right here. Came right back up to a big fat, almost like a shoulder head shoulder pattern, right? The big M, shoulder head shoulder drop, and then it did a shoulder head shoulder going the other direction. Okay, now once I identified this big fat W, I know the next day is stop and low rise, except it did it in Asia. So when you see these railroad tracks, that's what we'll show you how to grab the best entries, how they come down and hit there's something called a low test candle. They'll start coming back down. We get in on these low tests. Okay, so now your stop is only 17, 18 pips instead of getting in over here and then having a 30 pip stop. You see what I'm saying? So that's how what we do is we minimize our risk while maximizing our profit. Okay, so when I woke up, this was already down here, and I'm like, I don't know about that, man. Then I see this hammer, and I'm like, fantastic. So this one closes above. I'm like, that looks like an Empire State upside down, Empire State pattern. And I see the spin bar. The minute the spin bar starts coming down, I look for my long trade. Because I'm looking at this as a head and shoulder pattern going long. This is stop hunt low rise. I'm expecting that. So I'll take that trade, and I did take this trade, and it went up approximately 25 pips. All right, remember, for me personally, I like a 25 pip stop loss. You know, then I kind of trail my trade by 25 pips. So it came up, and it came back down, and I got a -2 pips. I got a stop out at -2 pips. Okay, and then I was not happy about that, obviously. And then I thought, you know what, I'm going to go to bed because I was exhausted. Otherwise, this is what we call a confirmed W pattern, and I would have gone long back here. My target's usually 40 pips, by the way. All right, and then I would see in this railroad track, and I'm taking this short because this didn't bounce off the 50. Did not because I was looking for at least to hit you know, at least hit the water. It didn't do it, and then the second time it does railroad track, that's just short to the downside, and then it comes back, hit the stop again, and drop again. But this is all in the middle. Forget it. No good. This would have been the only trade I would have looked for. So tomorrow, because if you look at the pound, that's why it's kind of interesting to look at the higher time frame and create a biasness on it. That's why Steve talks about it. This is all level 3 on the 1 hour chart. This is your big shoulder, head, shoulder pattern. Notice how they come in and induce. They'll throw a pin, they'll throw a pin, they'll throw a pin, and then they'll rise. You see what they did? They came right to the low, induce, short, and then they start rising. Ideally, I'm in level 3 levels of rise. I'm looking for shorts. So I'm looking for every reason to go short, either to an M or something of the sort, something telling me to short at the start of London or in New York. Or tomorrow being non-farm, normally I just don't even look at the trade. I take Fridays off on non-farm. Same with Zen and Dai, by the way. They don't trade non-farm. That day, they just take that Friday off. Early week. Mainly because most of the time, from experience for the last several months, they just chop, man. They'll pull it up 50, 60 pips, and then they'll just chop on the high. They'll bring it down. They'll hit the stop low. You can trade that. If you trade stop hunts, you can trade them up and down, up and down. Just trade the stop hunts, and you can kill them. It'll come above here, you take the short. It'll come below here, you take the short, long, and it'll hit the stop, you take the short. But it has to go above. Okay, it has to induce. Start of London, not now. Don't take any trades now. Okay. So anyway, the better trade, like I said, is hit the stop high drop. That's what I would like it to do. I'm in level 3 high. I see head and shoulder pattern. That's my bias. Okay. Did you guys take anything in here? Did you get any comments to make?
Yeah, Car, I did, and like Granny, okay, Car, you're the gray box. Yes, right there. Okay, you can see, well, probably they can't see, but there's two pins to the red to your 13 EMA.
Right here.
Down, Car, down into the box. After they drop, they hit the stops high.
Mm-hmm.
Up, yes,
here.
right there. Right there. On the close of that red candle, I got in and put my stop just above the high of the green candle, above the 13 EMA. And like Granny and I were talking, and Granny did the same thing. When you're in really volatile markets like we've been seeing the last couple days, sometimes these tight stops will get hit. And you can see they came up on the next bar and came up through the red, through the 13 EMA, and widened the spread and tagged me and took me out. So I took a loss on that trade this morning. And then, of course, the market just dropped from there. But that's, and these are the kind of things that we, Car, Granny, and I will teach you, is how to get in these moves if you're not in at the top when the move starts, or at the bottom when the moves start. So, and you can still be very profitable doing this. Okay, that was it. My losing trade.
Yeah, no, Kim is fantastic. Kim is a fantastic trader. Let me tell you, man, she just does very, very well trading the way she trades, because
I have a different eye for this. But I take what Steve has given me, and I've just like blown it apart into trading his methodology, but taking it and using it in the New York session in a different way than Zen and Diane do. So, and Granny does the same as I do.
Yeah, just a quick FYI, this is a more advanced way of trading the pushes, okay? So, for newbies, you will learn how to trade off the high and low, which is what I normally do, because I trade the London. So I normally catch the low, low, and then Kim and Granny trade off the moves, intraday moves. So they will say, hey, push back, boom, I'm in. Push back, boom, I'm in. And that's how they'll trade. That's a very advanced way of trading. But you know what? If you want to be a master trader, that's one way to do it, is to learn. Because if the market makers change the patterns, they still have to hit the stop. They still have to hit the stop, drop. They have to still do those movements. If you understand how to do that, they can change all the pattern they want, man. You still got them beat, because you know what they're going to do next. Granny, were you going to say something?
No, I wasn't. I was just reading the questions here.
Oh, okay. Yes, Isubio is going to be like, if I got stopped out, you're on
that's
it.
right.
With 500 standards, and kill them right here with that pin.
Yep.
And yeah, I mean, that's, if I'm looking for short, this is the pin I'm looking for, man. Exactly right here. This is all I look for. This. After I understand what they're going to do. Okay, so like 2 pins to the water, 2 pins to the Mayo. I'm looking for a retrace back 50% of that move, and then I'm going in. That's how I look. I look for these pullbacks. These are called, this is something Scott coined up. He called these high test candles. That's where that high test and low testing came from. He sits in front of the computer all day and looks for these high test and low test candles, by the way. All right, so
excuse me, Antonio keeps, I guess his question keeps dropping. He wants to know, do we never see reversal after a first leg?
Not like here's my first leg, right? You see it always comes back. So anytime you see a ginormous move, they have to collect contract. That's not enough contracts. They have to come back, induce short, collect some contract, and then move. So if you notice, have you seen one leg where they move? No, they always come back and they form the second leg. That's why Steve says, if you grab it on the second leg, your drawdown is very little and your profit is maximized tremendously. All right, so that's that's what we normally show you. All right, I'm gonna go quickly pound yen and then pound yen. Yeah, pound yen is kind of weird. Okay, pound yen, we just kind of hit the stop low, huge consolidation, and then it took it out. Here's the nice fat M pattern. Okay, this is peak formation low right here out of this level 3, and then because they've been collecting contract at the bottom, And the yen, they're just kind of weird, man. It's very tough. I would stay away from the yen at least until Monday, Tuesday, when they actually tell you which direction it's going to go, because they just busted this for 600 pips, man. It's done. The whole move is done. Now, what these guys are going to do is going to chop in between here to non-farm, and then they're going to make a decision where they want to go. This box is 97 pips. It's already blown out. I'm not even going to look at it. All right. What direction would I like it to go? Hit the stop low rise right off the 200. That's what I would like it to do. Okay, but I'm not going to even trade it because the box is blown out. First of all, second of all, obviously non-farm, and the timing right now is not right. Okay, so, and this is the last one, pound Swiss, beautiful W pattern, comes back up from the ginormous M. You see, this is when I come into trade, right? You see the spin bar at the edge of the box? This is what I'm looking for. Hit the stop high, drop, boom, it's over. You take that trade and you gotta walk away, man. That's why I go for 40 pips, because I cannot even tell you how many times it goes to 48 and then I get landed up at like 25. Okay, so what I do so far I've done is just take 40 pips, and I kind of get hit all the time. Like this, see, this went up 48 pips, and then I'll close it at like, because I would have moved my stop to break even, or have stopped me out, and I'd be like, dang. But that's the pin I'm looking for. Big fat M, multi-day M. Those are the things we talk about. So now I'm looking for ideal set. Ideal, this is the big fat M. I'm thinking this is a reset. You got to remember, this is also sitting at level 3. This is 3, obviously, right? This is a reset. Now, if it comes down and hits the stop low, I'm expecting it to rise. Look at that pin right off that low, right? But if ideally, what I would like to do, I would want this to be a reset. I want it to hit the stop high and drop. So I'm going to see what it's going to do at the start of London. That's why both of these things are drawn at the same time. All right. And Aussie is easy. Aussie has been in a tear. Here's my level 3 formation. Okay. As you can see, level 3, they've been chopping back and forth. First drop out of this box, level 1. Hit the stop, consolidate. Now this is level 2. I'm expecting hit the stop high drop. As simple as that. So normally what I'll do is I'll have these zigzags drawn like that. And that's what we normally do at the sessions. I'll draw them, and then it'll just play out. If it plays out the way I like it to play out, it's like poker, man. You have these bunch of hands and you play the game, right? You get dealt your cards and you get, oh, you know what? I don't like these cards. I scratch. And then the card comes the way you want to play it, and you have a high probability of beating the house. That's the card you're going to play. That's when you put your money down. I'm sure Subio does the same thing. He's not going to be like, or Ricky does the same thing. He's not going to be like, I want to put 50 standards and I'm going to see what the hell they're going to do. No, man. They know, man. Okay, I'm waiting for this big ass pin bar like this. Sorry, excuse my French. If I see a pin bar like this right here, I'm going to go short. When it comes back in and closes inside here, it's been collecting contracts for an hour. I'm waiting for the stop on induced long breakout traders. They're going to jump on it. Not now. That's why the timing is wrong in London, because that's when most people come, right around the edge of the box. They'll come trade the breakouts. That's what they're going to do right here. So if I see this pin bar is about 20 pips. Minimum has to be around 15 pips. I like them. And then boom, that's the move.
Car,
Okay,
right
so-
at that, I'm sorry, right at that area you were in where you drew the box. Yeah, that's a good place for Kim and I as New York traders to get in, because if you count the stop hunt and measure it,
Sorry.
those 3 big candles leading up to that pin bar, if you measure that, that's a nice stop hunt
70 pips.
of 70 pips. And remember, Steve says 25 to 50 pips for a stop hunt. So
Yep.
you know that look how many people they took out. Everybody had their show over here, Car, where they had their
Yep, the
stop
stop
hunt
hunt.
after
Up a little further,
up
underneath
a little
the break.
high. Yeah, right
there.
there, right there. See,
Yep, they got all those breakout traders right there.
and these people were all in profit, and so they put their stop loss right there where his line is to break even. And then when Kim and I would have been getting in right here, the stop hunt came right up and took all those people out. So that's another thing we teach you, is how to look back and kind of see where are they going to go next in order to kill a few people. And that's a good example of it there. Sorry, Car.
Hey, no problems. Okay, so Okay, so that's pretty much what we do. So just a quick rundown of exactly what we do. Okay, we look at the chart on the hard right edge. We kind of tell you what our bias is based on the chart patterns. We tell you, okay, this is what you're looking for, that's what you should look for. We go once a week, we go over certain patterns that you should be looking for, confirm them, confirm W's. You know, how do you trade a railroad track with a high test candle? How do you grab it within, how you stop at 11 pips or maybe even 7 pips off the high, things like that. And you can take it with confidence because it just did the high test, man. It's not coming back again to get you, like Steve says, right? It just moved. Not going to move a 4 trillion market to come and get whatever 2, 3, 5 contracts you're trading. Okay, so I'm going to give you an example of something that we talked about, right? Here's your peak formation low. Okay, once we know this low, like we talked about, is already done, we're looking for longs. So we will say next day, hey man, you're going to look for stop and low rise. So you see it, you're like, cool, I got it. It breaks above the box, we're in level 2. Then we say next day, hey, stop and low rise. It comes out, hit the stop low, does the quarter wood, throw the hammer. You can go in long after the hammer. See, hammer, hammer, hammer. You're trading off hammers, right? Those are the things you're going to see. And as we tell you how to trade this, see, that's the first pullback. Hit the stop, hit 2 pins to the 2 pins. You could have taken this 2 pins. Let me just make it larger. I'm excitable, by the way. I get excited. I start talking fast.
Hammer, hammer.
Hammer, 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 right? 2 pins to the 800. You can have gone long right off the second pin. Boom. There's like 30 pips. Stopped out at break even. Then it does it again. Again, 2 pins. You could have gone long again off it, right? There's 50 pips right here. So, you know, so those are the things that you're going to be able to see, and we're going to say, hey, man, that's what it's going to do. Now, we're saying stop and low rise, and it comes up and it does a stop and high. You're like, doesn't make sense. That's something wrong with that trade. Pass. Then watch it. Comes 1, 2, 3 to the low, holds a level 30 to 90 minutes, throws a hammer right to the bottom, but doesn't close below the first leg. In. Your stop is literally 11 pips, man. And then the shift bar is over. Now I'm in level 3. I'm looking for short. That's it. It's easy, right? And then this one did a level 4. So I took this trade right off the high. And next day I was looking for high. I actually took the short right off the spin bar. 40 pips. That's why I go 40 pips. If I did 50 pips, I'm down here, I would never get it. 40 pips. Boom. Hit it. Then I go to sleep. I'm lazy. What am I going to say? Time, leverage, and freedom. I enjoy the freedom. But notice, these are the things we're going to talk about. See how it comes up? Induce long, comes right back in short. Again. Another 50 pips. You can trade both ways, back and forth, if you know what you're looking for. Right? Why is that? Well, I'm in level 3. I can trade both ways. Didn't Steve just say you can trade both ways in level 3? Right? And then here's my first leg. Here comes the second leg. Throws another hammer. I'm in. Obviously, I'm not going to go in long, and I'm going to have like a 50 pip stop. I only like a 23 pip stop max. I'll wait for this to retrace half the distance of the candle, and I'll go. And I'll put my stop below the previous day's low. That's what I would like to do. Okay? And then, of course, if it throws railroad track, man, you're in long, it's over. 40 pips hit. So you can just trade back and forth. And normally I like to look at like 6 pairs. I only trade 6 pairs. The reason for that is because I'm very intense. I look at these candles and I study them. I just don't take trades and I just make stuff up. I'm like, all right, man, this looks good. Boom, hit there, I'm in. But if I'm in level 3 and I'm only looking for short, then I look for short. All right. I don't take this. Why? Because it's in the middle of the range. It's between the high and the low. It's only off the extreme. You trade off the extreme. Extreme, 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 extreme. There's nothing in between. Okay? But that's not an M. It's between the high and the low. What pairs do I trade? Pretty much just the pair I showed you: euro dollar, euro yen, euro Swiss, pound dollar, pound yen, pound Swiss. Occasionally I'll look at dollar CAD and Aussie dollar, but I don't normally trade a lot of those pairs. It doesn't kind of... Listen. Look at Sonny. Look at some of the other guys, man. They only trade 1 or 2 pairs and they kill it. They kill it. It doesn't matter how many pairs you look at. It's how much money you actually put into the bank. Right? It comes right back out. Push 1. See how we talk about pushes and stuff like that. Granny loves talking about pushes. Kim loves talking about pushes, how to trade them. They'll form an empire state, you go. They'll form an empire state again, you go. Trading within the pushes, understanding the pattern, understanding that there's the head and shoulder within a bigger move, within a shoulder, head, shoulder pattern. It's crazy. It's absolutely crazy. All right. Anything you guys want to say?
Well, yes, Gar. I can't find it now. John made a comment, and it's worth talking about. He said, perhaps you may express that this class is not a substitute for homework or creating your own bias before class. And that's very important. Everyone has to understand that it is strictly a bias, and sometimes we're wrong. Sometimes they just do just exactly what we didn't expect would happen, and maybe it'll cause a reset, and then there'll be 2 more days where we thought it was done, we were in level 3 and it's going the other way. So you always have to do your own homework, follow the patterns that they present to you 8, 10, 12 hours after we've made our bias announcement, and it may well not be what we say. So please don't ever take that as a trading what am I trying to say? We're not
no trade recommendations.
Yeah, right. It's
educational.
We can't do that. I mean, everybody has to decide as they come out of the blue box what is going to happen for the day. So, but that was a good point, John. Thank you.
Yep.
Exactly.
Very good point.
Exactly. So, yeah, there's a lot of stuff, man. I mean, it's like we can't cover everything. We do go into more details about levels, how to find a real level, what's a fake level, things like that. Stuff that, like my good buddy Jeff Casciano, he said very clearly, he says, all we're going to do is show you stuff, material, that'll take you months to figure out, and we're going to show it to you faster and improve your learning curve tremendously, because that way your idea is to be profitable. We're here to help you as much as we can, okay? And after you learn it, and the reason there's certain costs associated with it, of course. I'm sure when you go to the forum, you'll see it at $75, which is the cost. I don't think that's very expensive at all. Actually, they want it to be higher, but you know what? We're doing it to help people out. And then there's a $2.50 transaction that PayPal charges us. Okay, so it's $75 per month, and it's 4 days a week, Monday to Thursday. Okay, we'll educate you. We show you a lot of good stuff. Granny will crack a couple of jokes. Kim will laugh at it.
I can always depend on Kim to laugh at my jokes.
And I laugh at Carr too.
Yeah, she does. And then hopefully after you guys learn this stuff, we stay together as a family, because you never know, because I'm going to get guest speakers coming in all the time. You never know who the guest speaker is going to be. Like I said, next month in September, I'm thinking about getting Dave Jiang. He's going to come in, and let's say he takes a trade out of level 3, big fat M pattern. He said, you know what, I just took this trade. He'll come in and he'll talk about it. He said, yeah, I took this trade, head and shoulder pattern. I'm going to hold it for the next 2 days. Guess what you're going to do? You're going to be like, man, he's going to hold it for the next 1 or 2 days. I'm going to look for stop and high drop. I'm going to short it at some point. I'm looking for my entry point. You know what I'm saying? So right off the bat, it's going to help you not only trade short term, long term also. Okay, I got to stop drinking the Coke that Steve is drinking, because I'm starting to realize I'm talking really fast. I'm clapping my hands. I'm running around the room, things like that. So, yeah. So once you sign up, okay, with the PayPal transaction, what I'll do is I'll send you a link, and then we will normally, like I said, normally our sessions are 8:45 p.m. Eastern, and we go for about 45 minutes. Okay, and then we'll just go through all the normal pairs that Steve talks about, and then we'll also go and have individual sessions once a week on other stuff. All right. Yeah, Peter, thank you. Thank you. Okay.
Micah says the
GMT?
cost
God.
of your coaching training is like buying today's gold at 1960 prices.
That's funny.
Cute.
Hey, Bruno, there's no charge for the Sunday sessions. Those are free for everyone to attend.
Yes. Yes, Sunday sessions are free.
And do we know the time in GMT that our review sessions are, Carr? Because someone keeps asking us that question.
It's 8:45. It's about 3:45. No, 2:45 in the morning. 6
Eastern?
hours difference.
I mean, not Eastern, but GMT?
GMT
Yeah.
will be 2:45 a.m. on GMT time. I know. That's why I know there's a lot of people in Europe who doesn't like the time. But what we're going to try to do is when Steve gets his new server, we're going to try to record these sessions and put it in there for 24 hours for those people who are part of the daily market review. So that way you can, if you can see it that day, you can look at it the next day, and then when the next session starts, we'll bring the previous one down. So that's what we're thinking about doing. I think that should help. Yeah, thank you about the Sunday sessions. We try to get, I'm trying to get Ricky in here. So Ricky Subio is coming hopefully on the fourth quarter. He sent me an email saying that he wants to present and show you guys what he does. So that'll be fantastic. We're gonna bring our buddy Fred back again. There's a couple of very good traders out there I would like to bring back in. Or bring in for the first time and actually show you guys, hey man, I only did the class in New York, New Jersey, and I've tripled my account already. Okay, that kind of stuff. Northern Europe should move to Australia. Hilarious. All right, so my planning is very full. I'll try, but no promises. All right, Asubio, whatever you can do, buddy. It'll be nice to hear your voice, associate you with a bit of voice, and if you can make the Dallas class, that'll even be nicer. All right.
Yes, Subio, I'll second that, and I know
There you
Granny
go.
will third it.
All right. Anybody who can come to Dallas, the three of us are going to be there, explaining what we do, just like we have done tonight. So if anybody gets to Dallas, we'll be able to meet you there.
Exactly.
Okay.
So, all right, I think we're done, right?
I think so.
I think so. I think it's a wrap.
All right, guys. So yeah.
Good night, everyone.
Good night.
Have a great night, and hopefully we see you at the daily market review sessions. Okay, and mark up the charts with these zigzags like the way I've drawn them, like Steve told you guys to do, doing your homework time. Zen.